मरा रहेगा लेके जाके ना पूरे घर को दरिया पे टुपके मरते हैं क्या?
नमस्कार सबैजनालाई मेरो मेरो आवाज सुनिरहेछ सबैजनाको Good morning everyone. Can you hear me? Excellent. Great. So welcome everybody. My room is full of students, huh? Great. In between, if you don't understand anything, if you don't find clarity, then just let me know, so I will explain that in Nepali as well. Okay, we have some students who don't understand English. Sorry, who don't understand Nepali. That's the reason that we are conducting this training in English. Okay, so once again, welcome everyone. Now, the reason that we started this program is there are so many interested for Forex trading, and so many of them are losing money because they don't know what to do and how to do. Right. So there are so many others who want to start the forex, but they have no idea how to start, what to do. And there are some others who have started forex and they are continuously losing it, because they don't know how to do it. They have no guidance, or there is no proper structure on what to do and how to do. So welcoming all of you guys. Now let us start. And before we start, let me check how many of you are completely new. I'm sending poll here. Okay, here is a poll. You can see on your screen now. Just select the option that is suitable for you. If you are completely new, just select completely new. If you are trading currently, select on currently trading. And if you are a profitable trader, click on profitable trader. Okay. Here is the one that comes on your screen. Good. Finish. Right. We have one gentleman who is a profitable trader. That's very good. And we have one who is trading currently. That means all of us are completely new. So this this program is going to be beneficial for those who are completely new. Okay. Therefore, we'll start from the beginning, from zero until the end, so that when we finish this training, then you'll start trading in a demo account. And once you think that okay, you are ready for that, then you can start training on the real account, having the broker of your choice. So now let's get started, and this training will be until 5 o'clock. So what will happen is, in between we'll take break, we'll take a lunch break, we'll take a smoke break, and then we'll continue. Okay, very much relaxed. And if you get missed in between, all of these recordings will be available in YouTube. Okay, currently it is live in YouTube as well. So now let us start with what is Forex. Now, engagement is very important. Okay, if we don't engage, then what will happen? We'll get lost. All right. Now, all the newcomers and those who are already trading, just type in a chat box, what is Forex? What do you know about Forex? मेरा सरासरी पनि पढ्दैछ नि यहाँ. Write down what is your understanding of Forex? No, to chat in a chat box. Vivek zero, like it is a trade of other currency. Forex, foreign exchange, Forex. This takes place with currency in the Euro USD. Foreign exchange, global currency, foreign exchange. That's very good. Everybody knows what is Forex. Okay. So let us first discuss in details about Forex. What is Forex? Forex Q. Okay. Now, to understand Forex, let's start from here. Let's say, for example, if you want to buy meat, where do you go? In the butchery. Yeah. If you want to buy vegetable, or if you want to sell vegetable, which market do you go? You go to grocery. Yeah. If you want chai, samosa, which market do you go? Do you go to grocery? No. Do you go to butcher? No. You go to chai wala. Right? Yes. So there are different type of market where we buy and sell. You need to come to the word called trade. What do we mean by trade? Trading means somebody is buying and somebody is selling. That is what is the simple definition of trade. Okay. So what are the types of trade that we do? I'm going to trade. We trade rice, we trade dal, vegetable, we trade stationery items, we buy from somewhere and we sell to the customer. That is what is trading. It is buying and selling the commodities, the items. So when we buy, what we do? We buy in cheap price and we sell in higher price, and there is the profit. So there is one market on this planet where we can buy and sell money, and that platform is something called Forex. Okay, so we buy and we sell the money, the currency. That market is called Forex market. Very simple. Okay. Now, another important thing that we need to understand is why we don't know about the Forex. It's because there are very few people who really share these informations. We don't get this education in school. We don't get this education in financial education in college. There are no places. There are no institute that gives you a tuition on how to make money. Okay, how to do a trading business. And another interesting thing is like every now and then we trade. Yeah, every now and then we trade. Just now, this morning you went to a supermarket and you bought something. That is a trading. Okay, you traded a bag of rice. So someone, what they did is someone early this morning or early today the market is closed. Early morning, they went to the Forex market and they bought euro and then they sold that euro to dollar. So that is simply what they did, and that is what Forex is. Now, while saying this, it is not that difficult. Okay, it is not that challenging. It is easy, and you don't need to spend like 3-4 years. But what you need to know is to become a doctor, you have to spend like 3-4 years in college. Yeah. What do you need to do? You need to study there. You need to spend money. You need to pay the tuition fee. You don't get your education free of cost, do you? No. So there is no university that teaches how to do a Forex. There is no school. There is no college that teaches how to do. There are no teachers, tuition teachers on how to do the Forex. So what you need to keep in mind is there is an education fee that you need to put in. That is spending that money in different teachers, paying them, okay, learning their strategy, and spending some money in the real account where you will lose, okay, because you are practicing, but you should not be losing more. There should be a limitation. Let's say, for example, when you go to school, then there will be a tuition fee. Yeah. Let's say, for example, for 1 year, the tuition fee will be, let's say, for example, $500. That means that $500 is your tuition fee, which you are going to learn on yourself. Okay. So it's not that we start making money from day one. It takes time to make money, but the moment you develop your skill, then you become a profitable trader. You will have your own targets. So that is what we will be discussing on course of time. Okay. So here what we will learn today, this whole day, is we'll start from the zero, what is Forex, and then at the end you will have a complete trading plan. And when you go home from Monday, what you will do is you will start practicing on that plan, developing your own trading plan. And I have sent you the link of Discord. Okay, I've sent you the link of Discord. All of you join there. Then what will happen is from Monday, we will start sharing everybody's chart. Okay, we'll do the charting. We'll do a plan, and then we will share in a group, and we will discuss. Okay, this plan is right. Yeah. So today we are going to trade on this plan, or we will wait until the setup is it. That is how that Discord is going to help us. Now, to summarize, so what is Forex? Forex is a marketplace where we buy and sell currency. जहाँ हामीले चाहिँ पैसाको किनबेच गर्ने बजार छ, त्यो बजारलाई Forex भनिन्छ. Okay, that is the simple understanding of Forex. Another factor to understand, now some part of the world, the Forex might be legal and Forex might be illegal. That you need to know from your country. Okay. Now, when it comes to Nepal, Forex is not illegal, but what is illegal is the crypto is illegal. Now, those who are in Nepal, जति पनि नेपालमा हुनुहुन्छ, नेपालमा समस्या के छ भने हामीले चाहिँ बैंकबाट चाहिँ पैसा नेपाल भन्दा बाहिर पठाउन मिल्दैन. We can't send money outside of Nepal to wire transfer. So you need to have now a broker account. Okay, to have a broker account, then you have a choice. Either use your friends outside the country, and the other one is to pay the amount or have a transaction through crypto. Okay, but now the transaction of crypto is illegal in Nepal, right? So you need to understand the legal part as well. यो चाहिँ एकदम महत्त्वपूर्ण विषय हो कि हामी चाहिँ ट्रेडिङ गर्दा कुन कन्ट्रीमा छौं, लिगलिटी कस्तो छ, ती कुराहरु चाहिँ हामीले चाहिँ विचार गर्नुपर्छ है. So this is the simple information on Forex. Now, how do we start then? अब कसरी सुरु गर्ने त? So to start Forex, the first thing we require is something called broker account. Okay. Why do we need broker account? Because there are big liquidity providers. Let's say, for example, there is a wholesale market. You cannot go and buy straight away from wholesale market, isn't it? So what do? From wholesale market, one shopkeeper, he brings some items and we buy from that shop. So from that liquidity provider, that is called liquidity provider. There are liquidity providers with millions of dollars in the bank. From that liquidity provider, then the brokers, they take the permission. Okay, they deposit money, they complete the legal formalities, and then those brokers are the person through which we are going to create the account. So who are those brokers? Now, in UAE, I always prefer the brokers to be listed in UAE. Okay, the broker right now I'm giving you is for the exercise purpose. Later on, if you want to deposit the money, it's up to you. But this is the setup that how we do it. Now I'm going to show you 3 different platforms. Okay, one is the broker's platform. The other one is the MT4 or MT5. These are only the versions 4 and 5. Okay, and I'm going to show you trading view. Okay, most of the people around the globe, they use MT4 or MT5. Some of them, they use trading view straight away. And some of the brokers, they also have option for C trader. Okay, we will not go to C trader. I will just show you how the C trader looks like. Now, to begin with, go to the chat box. I have sent you the link. Have you received it? So this is my demo account in XNS. Okay, I'm pasting the link here. We will do it together. Okay. Go to the chat box. Click on this link. We are doing together. Okay. Confusion no. Go to the link. You will get this link. Now click on open account. Okay. Click on open account. Write your reason. Your email. And your password. You should not be using special characters. Okay, and then continue. So here, click demo account. How would you rate your competency as a trader? No voice means I have no idea. I'm just planning it. Click on next. Done. So bingo. Here is the demo account. Did you have this platform? Demo MT5. This is $10,000 account. Can you type yes if you have done, please? Type yes on chat box. Good. Huh? Yeah, there are two options here. One is real, which will show 0, and demo. Okay, some of you have got only 500. That's fine. We are just practicing it. Okay. Great. And here are other informations. These are profile setting. Very good. Now we have two options. One, we can start trading from here. Okay, this is there is a button called trade. You can click on that. Okay, click on this trade button, and these are very critical information you need to save for yourself. Okay, you can straight away trade in XNES terminal. That means the platform of this website, or you can trade from MT5. Now let us see the XNES. Okay, choose trading account. That's our demo account. Now this is the platform of XNES. Okay, what I'm going to show you is how to use MT5. This is the most preferred platform for MT5. Okay, now here click on install terminal for Windows. We have two options. We can download on desktop, or you can straight away use web terminal. Okay, both of them are same, but the desktop one is much more easier and will have more functions. So click on MetaTrader 5 for Windows. It will download. If you want to use the web terminal, you can use the web terminal. Okay. But here, what I'm teaching you is to set up your MT5. Now it is already downloaded. Click on this exe file. Okay, MetaTrader 5. Click yes. Next. We are installing. Hello, we are installing your trading platform. We will be going from beginning to end. So be patient and follow the instruction, please. Okay. We are installing MT5. I use demo account. It is coming different. Basuji, can you share your screenshot, please? And then we can have a look. Okay, if you have already installed, now there is a username and password. When you click on this trade, what you see here, this is the server name, and this is your login, MT5 login. You can click here, account information. Okay, if you are using web and my installation has done, okay, this is the platform of MT5, okay, and this is what you will get when you open. Now here you need to select the company, XX Technologies Ltd. Internet connection is unstable. And now connect with an existing trade account. So what was your this was your MT login, right? Copy. This is your login ID. Nine three three two 779. Next.
Naresh sir, your on the screen is not
The
visible.
password is the same password that you have used for XNext login, okay?
Naresh sir, you can hear me?
Sir, your screen is freezed.
And connect with an existing trade account. Nine three two 777.
Sir, good morning, sir. Screen is freezed.
779.
Screen is freezed, sir.
Good. This is your own password and your server. Select this server, okay? XNext MT5 trial or whatever the server name is there. MT5 trial. XNext MT5 trial. You need to select the server, okay? So after downloading your application, you can see connect with an existing account. So the login, use the same password that you have used for XNets, and here XNets MT5 trial, and click on finish. That means now you are connected. This is your server, this is your login number. Okay, now we are already connected. Right, how many of you managed to connect MT5? Can you write yes, please? If you are still back, then please write no. If you are not able to connect, write no. Type no. Otherwise, type yes, please. Yeah, that's fine. It is not necessary that you have to connect from the same server. We just need to make sure that you have MT5 connected to the server of your broker. Okay. Let me know, please, if you need any help for connection. Okay, we are learning real time. Okay, so that you learn everything. I just want to make sure that everybody has the setup and we are following the same track. Okay. I will repeat that again, right? Now, I'm going to repeat the same process again. Go to your XNex, click on trade. You will see here MetaTrader 5. Click on this button and download MetaTrader 5. Okay. Once the MetaTrader 5 is there, it will open. So once you open, it will ask for the connection. You will have this type of screen. There will be login. There will be password. Password is the same password that you have used for XNES. And here is a server. You need to click on XNES MT5 trial. And once you click, then what happens? If you see at the bottom side, it shows connected, right? You will have these screens. Now, while rest of you are waiting, now let us look into this screen. Okay, let us familiarize. We have 4 charts here. This is for charting multiple options. You know, you can. It's up to you. If you right click on this name, chart name, right click here, and then if you click tile windows, then it will automatically adjust on this screen. Okay. You can just look one screen over here. This is the main screen. If you look into the left corner over here, here is something called symbol. Okay. Here use only the symbol that you want to trade. So this is the symbol Euro USD. My internet is a bit slow. So I hope that by now everybody is ready. Okay. Very good. I'm teaching, don't worry. Is anyone still back? Do we need to wait, or let's move ahead? Please confirm. If you are not yet ready, please say not yet ready, or just wait. Give me a signal, please, so that we move to next stage. Vivek sir, I think to allow you to share the screen, I have to close my screen. Or is there any other option? Let me have a look. All right. Now let's move forward. I hope everybody is ready now. Let's go now. Let's explore this screen. If any one of you is not ready, just mention in the chat box, please. Otherwise, I will assume that everybody is ready. Okay, please understand what I'm doing here is I'm not teaching you a theory. Okay, I'm taking you in the swimming pool, and now we are swimming inside the swimming pool. So we take a real look, experiment how it looks like. Web version. If you want to use web version, then also you have that option. Go to the trade button, click on other option, and click on MT5 web terminal. You can click on here and it will open in. It will open a new tab here. This is the login. You use your same password and terminal 5 trial. Okay, this is the web version. Move to next stage. Still, I could not be able to do. Okay, I will show you again. You have this terminal here, XNES. You click on demo, not in the real because we don't have any money here. We didn't do any deposit. Click on demo, and here you have something called trade button. Okay, click on trade button. If the Windows version is difficult for you, just click on other option and click on MT5 web terminal. Okay, this is your MT5 login. This is our terminal. Now click on MT5 web terminal. Once you click on MT5 web terminal, then what happens? Your login is already there. The terminal server is already there. You enter your password. Click OK. And you will have your platform here. Okay, so now let us understand what they are. This is our main screen, main platform here. Let us clean this area. Okay? We must have a clean setup. So right click here, go to properties, go to colors, click on color on white. Right click on this area, blank area, click on properties, and here is color box. Click on color on white. It makes easier. Click on this show button. Yeah, take off this show grid. Click OK. Now it's easy for our eyes. Okay. Right. So this is our screen. Now over here, you go towards your left side, and here are the pairs. Okay. When we say pairs, like we are trading pair here, PAIR, pair. Okay. Like euro, EUR means Europe, euro. USD means American currency. Okay. You will have AUD, that's Australian dollar. And then you will have USD. You will have JPY, that is a short form of Japanese yen. Okay. New Zealand dollar, Swiss franc. So these are all of these currency pair, and they are indicated in 3 letters, just 3 letters. USD. For Europe, EUR. Now, to begin with, we'll start with Euro USD. Now, if towards this left side, if you don't have that currency pair, what you do here, there is one small button here, click here. Yeah, do you see that? Now type here EUR and USD. Okay, and press enter. So what will happen now? Euro USD came in your symbol area. Here is your Euro USD. And right click on that Euro USD and click on chart window. Then what happens? That chart will come here. Now we are on the Euro USD chart. Well, we are moving very gradually. It's very nice. Now what we do is learning number 1. सबै प्रोसेस भयो यस्तो चार्ट कसरी ल्याउने हो भनेपछि त अब म फेरि रिपिट गरिदिन्छु कुबेरजी है त तपाईले MT4 पनि सेटअप गर्नुभयो हैन MT4 सेटअप गरिसकेपछि यो लेफ्ट साइडमा यहाँनेरि EUR मैले अघि एक्सप्लेन गरे हैन USD भन्ने करेन्सी तपाईले हान्नुहुन्छ अनि यसमा राइट क्लिक गर्नुहुन्छ अनि चार्ट विन्डो भनेर क्लिक गर्नुभयो भने तपाईको यो चार्ट यहाँनेरि आउँछ हो यो तपाईको चार्ट आयो So what we know now, this is the area that we want and this is the area that we want. We have two different area. Right click, here is something called one click trade. There is something called buy and there is something called sell. Now I'm going to explain you what is buy and what is sell. Okay, buy and sell. This is very critical because as a beginner, if you don't understand what is buying, what is selling, then we may fall in a trap of losing money. We will start losing money. Okay, I have lost so much of money just because I didn't understand this part. Now, Forex is only the market where you make money by selling and you make money by buying. And if we don't understand this riddle, then there is a problem. So, let me explain you what is buy and what is sell. All the currency market are closed today. The only market open is this Bitcoin. Okay, it is open now. Bitcoin, USD. Now I will. This is just for an example. Okay, the market is moving. This is our demo account. Here is one button called trade. Just watch the screen at this moment. सबैले स्क्रिन मात्र हेर्नु एकछिन है मैले तपाईहरुलाई बुझाउँदैछु तपाईले केही गर्नु पर्दैन स्क्रिन मात्र हेर्नु just keep on watching screen what I do because what I'm trying here is I'm trying to explain you what is buy, what is sell. How do we make profit while buying and how do we make profit while selling? Now you can see this is the market. Okay, this is the market. At the moment you can see here we are looking the chart of 1 minute. This is 1 minute chart, and if you look 15-minute chart, this is how the movement is on the chart. We will learn this movement after lunch break. Okay, now I'm just explaining you what is sell and what is buy because these are the fundamentals. If we don't understand these things, then we will lose money. Very simple. So over here, this is the view button where you can maximize, minimize the view. Yeah. And these are the cross here. You can see where is the candle, where is the move. So here, now let us go to this area over here. If you see what is happening here, the price was 23,769 for Bitcoin. Okay, then what happened? From here, people started buying. They started buying, and when the price was cheap, and when we sell here, then what happened? We made money. This is a profit. Buying is very simple to understand. When the price is cheaper, then we buy. When the price reach to the area where we desired, then we close. So what happens? We made profit. Now let us do this. Now, if we want to buy, then what we do is, these are the lot size, which I'll explain you later. Let us understand this. 0.01, this is the size. Now let us say what we said is, okay, this is already a good move. Here also, it has already made it. Now it is going to, let's say, is keep on moving. So we said, okay, we are going to buy from here. We click on buy. We click on buy. Now you can see here is what it is happening. We buy here, but what you can see is the line is way high than where the area we bought. This is also I will explain you later. Okay. And if this moves up, then what will happen? We will make profit from this move. If it moves below the area that we bought, then what will happen? We will be losing money. This is buy. And here, what you need to understand is we are buying or selling the pair, which means BTC, Bitcoin, is the main currency here, and USD is the secondary currency. Okay, what we have in our pocket is a Bitcoin. Now, what we are doing here with the Bitcoin, I'm going to buy USD. So if the currency is stronger, then what happens? We make, if Bitcoin becomes stronger against the dollar, then we make money while buying. Okay. If the USD is weaker, and if the Bitcoin is stronger, then what happens? We get lot of dollars, isn't it? That's a profit. And while selling, what we do, we have two pairs. This is what you need to always remember. We have two pairs. Now, let me help you with a simple example. We always have orange and apple. Let's say apple is euro and orange is USD. Okay. Now, sometimes the price of apple goes up, sometimes the price of orange goes up, or either way. One goes up, another goes down, another goes up, another goes down. So let's say, for example, the price of apple was 5 dirham and the price of orange was also 5 dirham. Okay. Now, all of a sudden, the price of orange reduced to 1 dirham. So what will happen now? You are going to buy orange from apple. That means your one apple was 5 dirham. Now the orange is only 1 dirham, isn't it? So what you are going there? You will sell your apple in 5 dirham, and then you will have a 5 dirham, and now you will buy orange. Now you will have 5 orange. That is exactly the principle. Okay, that is what buying and selling. If you are holding apple, and if the price of orange is cheaper, then what you are going to do? You are going to buy that orange, isn't it? Now, if your apple is cheaper and the orange becomes expensive, then what you do? You sell your apple, isn't it? You sell your apple and then you buy the orange. That is what is buy and sell. Now here the price moved up. Okay, the price moved up. That's why we had a profit of 0.10. Here we decide until what area or what is my profit target. If we don't know our profit target and if we keep the market open, then we will be losing, which we will learn about this later on. Later on, we will come to the point. Here we are in a buy position, that is buying, because the currency is getting better and better. That means we are holding Apple now, isn't it? We are holding Apple and we are buying USD. That means the Bitcoin, the Apple is getting stronger. So we are making money over here. That is, we make money while buying. Okay, this is a buy position. Now let me close this. Here we made 0.010 cents. We are making money here. This is in buy position. Okay, the price was at the low level. When we buy, it moved up, and then we made money when it moved up. So now let us see. This is not a sell position, but just for a demonstration, what we are going to do is, we thought like, okay, from here now the price will be going down. Okay. So what we do here is we click on sell. That means now we are selling Bitcoin against the dollar. Okay. We click on sell. The unit is 0.01. Now, if the price of this orange goes down, then what happens? We make money, because the money that we are, the Apple that we are holding, it is stronger. See, it went down, we made 0.02 cents of money. This is while selling. This was our profit target. We close our target. Yeah. Now, if you see the trade history, now, when you do a trading, you never look into value. You always look into percent, because if you look into value, you know, you may get upset, or you may feel, no, I didn't make any money. So we invested 0.01 cents, and how much did we make? 0.07 cents. Now see, what is the profit target? Okay, we invested 0.01 cents, and how much did we make? 0.08 cents. Now you look into the percentage. How much percent profit is that? 0.01 divided by 0.08. 125% profit. Is there any business that gives you 125% of return in a minute? No. Okay. So if you do it in a right way, you may make 125%, 200, 300% in a click. But again, remember, you may lose same amount of money if you choose a wrong direction. Okay. So that is buy and sell, and that is how we make money in the Forex trading. So earlier I was explaining there is something called, when we position here, what happened? It did not position in the same place. It went up. Okay, it positioned in different place. That's because of, there is something called swap. There is something called the leverage. You know, there are commissions. We need to understand those parts. So stage one, what did we do? We set up this MT5. Okay, this is called MT5 platform. This platform is where we use for trading. We have completed stage one of our today's learning. Okay, this is called MT5. You can download MT5 from App Center, download on your mobile, and it is synchronous. You know, you do anything here, it will reflect there. If you do anything in mobile, it will show here. So this is one platform which is called MT5. Okay, and I'm going to show you the other platform. I'm going to show you the another platform which is called tradingview.com. This is another popular platform. Usually all the analysis, okay, all the analysis of trading are done in this platform. It is much more easier, it is very flexible, and it has multiple options. You can straight away trade here as well. So now what I'm going to do here is show you what trading view is. So everybody, what you do, go to www.tradingview.com. Yeah, this is our tradingview.com. Now click on product and click on chart. Tradingview.com, this is the screen that you will see. Click on product, click on chart. Go to tradingview.com, click on product, click on chart. And okay, over here you will see the time frame. Just click on 15 minutes. Okay, everybody has trading view on their screen now. Please type yes or no if no. Good, we are on the same track. Product chart. On your right side of your screen, these are the currency pairs. Like if you remember in MT4, in MT5, the currency pairs were here on this side. Yeah. In TradingView, we have currency pair here. If you don't find Euro USD then or any currency that you are trading, you can click on add symbol, type EUR USD, and click on this plus button, and that will appear here. Click on plus button, right side plus button. Yeah? Good. So this is our currency pair, and this is our screen space. So over here, if you bring your mouse down, here is one arrow you can see. Okay, you just click on this arrow and pull up. Click on this arrow, pull up, and click on paper trading. If you click on trading panel, if you click on this trading panel, then you will see so many icons here. All of them are brokers. Okay, all of them are brokers. Like XNES, yeah, these all are the brokers. Among them, okay, see, once again, this is how your trading view looks like. Yeah, good. Bring your mouse down and click down here. Down is the trading panel. You have to escape from here, no? Trading view is having issues today, looks like. Everybody got it? Yes, Basuji. You need to have a separate window for that. Let's say, for example, you go to the new window, click tradingview.com, click on products, and click on chart. When you come to this area, I will be teaching on Euro USD. So make sure that you have Euro USD symbol over here. Okay. If you don't have Euro USD symbol over here, click on plus button, type EUR Euro USD, and click on this plus button. Okay, there is a plus button. Once you click that plus button, then you will have Euro USD here, and now you close this window. You close this window. Okay, and you click on Euro USD, so you will get the chart of Euro USD here. Got it? So this is the chart of Euro USD. And now what you do, so उसमा क्लिक गर्नु, प्लसमा क्लिक गर्नु पर्यो, तपाईले अन्त क्लिक गरिराख्नु पर्छ। Right, one thing, if what you have to do is you have to create account. Okay, if you are not logged in, then log in with your email. Log in with your email. If you see login page, log in with your email, and then you will see this this setup. Mr. Tausif, are you there? Can you type yes so that I understand you are there and watching me? Great. So yeah, I hope everybody has their trading view and have the currency pair here. Now what you do is you scroll from here up. There is trading panel. Okay. Now go and click this paper trading. Click on paper trading and click connect. Don't click on any other. You got to pay money for that. This is paper trading. Click on paper trading and click connect. Connect. Now we have demo account with $100,000. You can see your $100,000 over here. What we did until now is we created demo account and then we connected to MT5. We came to trading view, we created demo account and we have connected demo account. Now you can exercise on MT5 and you can exercise on trading view as well. Okay, now we have our account ready to move forward. We will have a lunch break from 12 to 12:30, Vivekji. All right. So on the left side, you have these tools. I will teach you a couple of them. Rest of them are just easy. You know, you can just see here and then you will be able to do it by yourself on the process that I will use all of them, and then you can just follow it. Okay. So what's happening now is we made a setup here. This is our panel. Now, if you want to change the colors or candle colors, background color, then what you can do is you can click on this button over here, right? This button, setting button. Click over there. You can go to the appearance, background, whatever you want. Okay, black, white. I always prefer the light color so that it doesn't hurt my eyes. And there is a psychology behind using the color of this symbol. Okay. When it says red, by default, our human being, what happens is, we because red is about what? Stop. When you go to the signals, when we are on the road, red means stop. Red means blood. It is negatively connotated color, So what happens is when your eyes sees more red color, it doesn't help you, to boost yourself unless you become, unless you go to one level. Our eyes will start looking only red. Then we may think, okay, the market is going down. So it's up to you. but most of them they don't use it red color, and so do I. You can see on my chart. So if you want to change the color of a chart, it is the same thing. Yes, go to setting and click on symbol and body color, border, week. Okay. I have given you the link yesterday. I hope you you guys went through it, and I also hope that you have at least basic understanding of candlestick. Okay, it's as simple as this. That's all. There are two colors of candles. One symbolizing down move and another symbolizing up move. Okay, so these are the changeable colors. Whatever you prefer is up to you. So that's the candlestick. Okay, now here, this is the body of a candlestick. This is the body of a candlestick. That means these are the opening and closing price. What does this mean? Now let us see here. Okay, make your chart a bit big. And on your top, there are OHLC. Can you see that? Over here, top, on your top. That means O means opening price of that candle. H means high. How much high the price go? L means how much was the lowest price? C means how much was the closing price? Okay, OHLC. Now, what this is candlestick represent is, you got to understand this. Okay, here is one apple. This is apple. And here are two guys. Guy number 1 and guy number 2. So this guy says, okay, I will give you $5 for this apple. Right? I'll give you $5 for this apple. And then this guy says, no. I will give you $6. The price goes up. Yeah. And the other guy says, no, I'll give you $7. Okay. And then the other guys comes, and what they did, what they do, they start selling down, and there is a move up. So the guys comes, it goes up, it goes down, it goes up, it goes down. Okay, so while it makes it move, the price will also go up and the price will also go down. Yeah, but what happened actually is they were only the bidding prices. Some of them said, okay, I will give up to 50. Some of them said, I will give up to 70. But actually, the opening and the closing of that price was this. That's why we call it body of the candlestick. Okay. So what happened here? This is the lowest price that Apple made. This was the lowest price, and this was the highest price that made. Okay, this was opening price, and this was closing price of that Apple for that day. Okay, now let's imagine this is $1, this is $2, closing $3. This one now. Tomorrow, what may happen? Tomorrow again, the guys will come to the Apple market. Again, what they will say, no, the yesterday's pricing was very expensive, you know. So what they will do again now, they will start bidding. So some will buy, some of them will sell, some of them will buy, some of them will sell. Yeah. And then what happens again? The price of Apple came down from yesterday's price. Can you see here now? So this was the yesterday's closing price, isn't it? This was the lowest price. But what happened? The lowest price of yesterday was not strongly broke. That means the market is moving to the low of yesterday. And again, what will happen? So tomorrow again, guys will come. Then again, the price will be up and down, up and down. The price will go again up and down, up and down. Simple. So that is what we call the move of the market. Now, when the market moves up, we call it uptrend. When the market moves down, we call it downtrend. If we don't understand the uptrend, downtrend, or bull and bear, have you heard that word, bull and bear? Good. Bull. Why do we call bull? Because when bull walks, it walks straight, you know, like this. That means that is an indication that the market is going up. And why do we call bear? Bear means when bear walks, the head is down always. That means the market is going down. That is how the market moves. Now, if you look into this chart, what do you see here? Okay. I'll make it small so that no guess. Okay. Let me take here. Now I'm going to ask questions. You need to participate, guys. Huh? Okay. We call it candle. Yeah. Every candle represents money here. Okay, like I showed up here. Now, if you move your cursor on this candle, then what it is opening price is there, high is there, how much high did it make, how much low did it make. So here people are all selling. Yeah, down, selling. The blue means buying. So people sell, and there was no decision. Again they buy, again they buy. So here, if you see this, what is the market doing? From here to here, people are buying because it is going up. Yeah. And then again, people started selling. Good. Let me move a bit. Right. Now, do a guess. Okay, just a guess. What do you think market will happen? There will be a buying opportunity or selling opportunity? Okay, everybody type on the chat box, please. Here, what do you think? It is a buying opportunity. It will give us a buying opportunity or selling opportunity. Are people buying or selling? What do you think? What people will do from here? Okay, selling, buying, buying,
So which
buying.
point, sir?
Yes.
Which point?
Asmita, what do you think? Buying. Why do you think we must buy from here? Huh? Price is, when price goes down, we must be selling or buying. Okay, that is what we will learn. Okay, that is what we will learn. Now, this is what we call the structure, the market structure. Market doesn't move straight. Sometimes it goes up, sometimes it goes down. If we are able to catch that move, then we make money out of that. Okay, so here, lesson number 1, we must understand the market structure, and the market moves up and down. Okay, now here we can see it's going down. Yeah. It's going down. Do we know how long it will go down? We don't know. That's the challenging part when we do the trading. We must be able to figure out, okay, we must be able to predict that this price action will go until here. This price action will go until here, okay? Because that's where we call something called high probability. What do we call? High probability. There is nothing called guarantee. We cannot guarantee. It's not 100%. We say high probability. So when the market price was here, we made our guess that the price will go down, right? We made our guess. That was only a guess, isn't it? Now let us make another guess. What do you think will happen now? It will still go down, or it will change a move? Okay, a little bit further down, somehow we guessed. Okay, it might go down. No, it didn't go. See? It's going up. So when market moves, then what do? They create some interesting area like this. Do you see? Do you see this area? There is something which is causing this to break from here, isn't it? Yes or no? There is something. There is something which is causing this moves. And these top points we call swing high and swing low. There are highs, there are low. There are highs, there are low. So now if you look into the structure, now if you have seen these candles, isn't it? Go here and click on line. What do you see now? If you click on lines. Okay, I will show you how. What do you see? This is what you see. Thumbs up, goes up, down, up, down, up, down, up, down. Do you see the structure? This is how it is moving, isn't it? But if you go to candlestick, it may be difficult for us to understand this one, but the movement is this. See? It made a high, came down, move up, came down, move up, came down, move up. Now, if we are selling from here, then what will happen? Okay, it came here. What our expectation is, it should go straight over here. That's what we expect, isn't it? So it comes here, and again it goes up, then we think, shit, Now I lose my profit, because if I close here, then what will happen? I make a larger profit, isn't it? But it went up, so what will happen? No, man, it is not going down. Okay, I have to close my position here. Then we close our position, then what happens? It again goes down, again comes up, again goes down. So what it does is it makes lower high, yeah, lower high, lower low. Again comes down, lower low, lower high. So this is one structure, which what we call here, this one, downtrend. One type of market is downtrend, it's going down, or you may also call bearish trend. Yeah. Now let us look this chart. What this guy is doing here? It's coming from down, up, down, up, down, up, down, up, down. Yeah. So what is this market doing here? This is uptrend or bullish market. Moves up. This is one type of market. Yeah. Uptrend, downtrend. And now there are other type of market where there is no up and there is no down. Can you see this one? What it is doing here? That's all it's doing here. This is what we call ranging, or in another word, consolidation. It is just consolidating and getting more people idle. Many people don't trade on this area. So as a trader, the first lesson that all of you have to learn is we have these three structure in the market. That's called market structure. Either the market structure is uptrend, or the market structure is downtrend, or the market structure is ranging. Okay. As a beginner, when you become expert, you do whatever you want. Okay, because you know how to lose money and you know how to make money. As a beginner, the moment you see this structure, you don't enter inside the market. We must understand the structure first, then only we enter into buy and sell. This is the market structure. We choose a direction first, whether it is going up or whether it is going down. Now, when we say the market structure, another critical thing to understand. Okay. What is the time frame we are looking now? 15-minute time frame. Yeah. If you change this time frame, let me take the screenshot. Now let us go and check daily time frame. What's happening now? Is the move same? Is the move of 5 minutes and 1 hour same? Sorry, daily? No. So this is what we call triple screen. Before we decide the direction, now what we are learning here is to know the direction of the market. If we don't be clear where the market is moving, then what will happen? We will be in a big problem. We will lose the money. Because what we think the market will go up. That's why we put our position as a buy. But all of a sudden, what happens? Market goes down and we lose our money. So first, we need to identify what is the direction of the market. That is why what we are learning now is a market structure. And there are three structures. One is uptrend, one is downtrend, and another is consolidation. That area we don't enter at all. Okay. And after that, now to determine where is the move, then what we do is we look from higher time frame to lower time frame. Okay. So let us have a look on this one. Candlestick. We are looking at month. Okay. Which means this one candlestick is the movement of how many days? 30 days. 1 month movement is this of the price. This is 1 month movement, 1 month movement. Now, if you look from 1st of June 2021, from 1st of June 2021, the market is continuously dropping down. This is our monthly chart. Now, if you are in this month and if you sell, okay, but the market went up in a smaller time frame. Market is, now we are 100% confident that until here the market is downtrend. We are confident, right? In monthly chart. Now let us go to weekly chart. What does weekly chart show us? Same thing. Let me highlight from here to here. Okay, this is month. Now let us go to week. What does week show us? Same downtrend, continuous downtrend. What does day chart show us? 3 of our main time frame confirmed that this is down. So what should I do now? Buy or sell? When do we buy? When the market is we buy. When the market is going down, we sell. There is difference between we sell, we buy, and buy opportunity and sell opportunity. Okay. Because this is downtrend, there will be buy opportunity in between as well. Let's say, for example, this is a downtrend, isn't it? So if we buy here and if we close our position, did we make money? From here to here, we made 205 pips. We had this buy opportunity as well, even the market is down, right? But when the market is down, you focus on sell. What we always do as a trader, we take one direction. If it is downtrend, I will be only selling. I'll be only selling. Okay. If it is uptrend, I'll be only buying. Why? Let's say, for example, this is going down, right? This is going down, down and down. Now, if I sell here, what did market do? Market from here to here, what did market do? From here to here, market went up. That means market went against my direction, isn't it? I put here, it went opposite direction. That means I'm losing money. But will I close here? I will not close here. Why? Because the trend is down, it will come down. Yeah, the trend is down, it will come down. So I'm confident. It's okay. How long it will go? Where it will go? It is not going to change the direction from here because we have analyzed monthly, we have analyzed weekly, we have analyzed daily. This 3 high time frame has confirmed that it is a bearish market. It is anyway going down. So why should I bother? It's going up, let it go. But if I put my position here, right? And it went here, which is almost like 40 pips. Okay. Now, if I don't have confidence and if I close here, then what will happen? I close in loss. That's minus 50 pip loss. And after 2 minutes, what will happen? It will come down here. And then again, what I will say? Why did I close my position? So the first thing that we as a trader must always start with is, where is market? What is the market structure? Identify that. And then to confirm your market structure, we always go through month, weekly, daily. Okay. Now, these are 4 higher time frame, and these are very valuable if you will be trading on 1 hour or 4 hour. Okay. If you will be trading on 15 minutes, then you go and see 4 hour how the moves are doing. The rule of thumb is you must check at least 3 time frames. At least 3 time frame. Okay. So this 4 hour also, what it says is going down. 1 hour also shows a downtrend. Yeah. All of them are showing downtrend. All of them are showing downtrend. Now, another question for you guys. Okay. If you see from here to here, what do you see in 1 hour time frame? It's going up, yeah? Isn't it? It's going up. It came all the way down from here. It came down, and now again it is moving up. What it is doing? This. And what we may assume, which is very simple assumption, to buy. So what will you guys do here? All in the chat box, please. What will you do here? Will you buy or sell? You will buy or sell? Okay. How many of you will buy? This point. Let's say, what will happen if you buy here? It's coming down. What you will see is, okay, if the price comes here, we will buy, and I will take profit. Let's say, for example, your target is very small. You want 20 pips profit target. Yeah, you didn't put your stop loss. And now let's see what happens. Boom, 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 boom. Are you making money or losing money? because you buy here. You make money only when the price go up. If you buy one apple in $5, if you want to make money, the price of the apple has to go up, isn't it? $10. Then only you make money. But you bought an apple when the price was going down. If you remember, what did I say? What did I say earlier? Your buy and sell decision is not made in a smaller time frame. You don't decide in 1 hour. Yes or no? Where do we make the decision? In a higher time frame. Whether I will be looking for buy or sell is decided on this time frame, in monthly time frame. Let's say, for example, in month, what is happening? It's trending. In month candle, what is happening? Last month, it was here. This month, it was here. So whether I buy or sell, I will put my stop loss very strictly. I'm not confident whether it is going up or whether it is going down. It is not taking any direction, is it? Over here, is it taking any direction? No, it is not taking any direction. Okay, it is just ranging. We don't know. Maybe there will be another candle. It will move up and move down, right? So that's monthly. That's weekly. See, it is not taking this low, and it is not taking this high either. Yeah, there is low and high. So what happened? Market came, market move up, market came down. Yeah, if you see, what did we learn in a candle? There is something called body. Yeah, this. Now, if you see, this low is taken out, means this has crossed this low, but not with the body, only with the wick. That means this is very weak down here. It is not strong. We really can't say, okay, this is the break of low of this previous low. Okay, so it's ranging here. And daily, this is a previous low, no move below this low. Yeah, and this is high, isn't it? This is a high of the previous price, isn't it? This is the low of the previous price. Where is the market now? Here. It's coming down, up, we don't know until when. Okay, so as a beginner, what you do, you will wait. But when you move to one level, okay, when you become more experienced, then there are good opportunities in this range as well, because what we know is it's coming here, it's going to toss this again, it is coming here, it is again going to toss this, it is coming here, again going to toss this. So what we do now? When it comes here, we sell. Yeah, what we are confident is it is going to hit and return back. So when it comes here, what we do? We buy. Again, when it comes here, what we do? We sell. When it comes here, what we do? We buy. Isn't it? So it takes one level. But as a beginner, we don't advise to trade on this, because we don't know. You buy here thinking it will go down, isn't it? Right? You thought it will go down. That's why you buy here. And you are so confident that you don't have a stop loss. We'll learn about stop loss, the value of stop loss. Okay? So what will happen? You buy thinking it will come down. And there was a news. Ukraine hit by US. Boom. Your $1,000 gone. It didn't come down. Is there any guarantee that it comes down? No. Why? Because there is no direction here. It is ranging. Anytime it may continue down. Anytime It may continue up, or anytime it may return from here down, or anytime it may come here and go down, go up. We must have a protection, and we must know the fundamentals. So that will help us to protect ourselves from losing the money. Okay, so that's the reason when we are a beginner, okay, at the learning stage, trading on these are very risky area. Okay, so the first thing is what we do. Number one, we identify the market structure, what structure it is, and then we go to time frame, higher time frame. We'll see month, we'll see week, we'll see days, and then we decide, okay, what's gonna happen, where is the move. Okay, and then we go to 15-minute. So if we are working professional, okay, we will not have time to trade on 15 minutes. Yeah, because this is very short time. So for working professional, the good time for us is like 1 hour or 4 hours. Because what will happen? We'll put the position, we'll put the profit level, and then the market will continuously run. Yeah, either we unless there are some sudden news are there, we need to look. Otherwise, we don't need to do anything. We just put the position. After 4 hours, result will be there. Either we make profit, or you want to close it in between, or it hit the stop loss. Okay, so 1 and 4 hours are the best for the intraday. Other long, they can go for week, month. So these are two most important thing in trading. One is the market structure, whether it is going which direction, and knowing the move, the direction of the market by using triple screen method, that is using at least 3 higher time frame than the position that you are trading. So these two are very crucial. Good. I'm not going to teach you candlestick, guys, because that you should have learned by yourself. You should at least know what is candlestick. Okay, but here I will teach you certain candlestick pattern that are very crucial. Now everybody ready? Good. So I'm going to create a shape of one candle, and your task is to identify that shape. Smaller time frame. It could be any color, okay? Don't bother about whether it is green and red or red and green. It could be anything. This is what we call wick, W-I-C-K, okay? So this wick, the candle might have this wick, the candle might not have this wick, okay? Candle might have this wick, candle might not have this wick. We are not bothered about that. What we are bothered is one candle is completely inside to the other candle, okay? Do you see this small candle? It is inside this big candle. Okay, or it could be on this position, or it could be any onto any direction. Now, from here to here, please identify how many those shape of candle do you find. Okay, yeah. From here to here, how many candles, how many pair of those move do you see? I will give you 3 minutes. Okay. Look at the screen. I'll give you 3 minutes, and then share in the chat group. Okay, how many those shape did you find? And that shape is called bearish engulfing or bullish engulfing. Okay, so you can, if you are not clear, then go to Google and type bearish engulfing, bullish engulfing. You will see the shape there. Come back to the screen and then identify how many engulfing candles do you see. Okay, mark it out and share in a chat group. I'll give you 3 minutes. Okay, your time starts now. We'll go for lunch at okay, we'll finish this exercise and then we'll go for lunch. It's already 12 o'clock. What? Please finish the assignment. Go to Google, type bearish engulfing and bullish engulfing, see the shape, have an understand of what do they mean. Come back to the chart and find out how many are there. Okay, I'll give you 3 minutes. After 3 minutes, you must start answering in the chat box. Right, guys. Looks like you didn't do it. Okay. So let us look from here. We were supposed to see from here. I hope I didn't mess up. Okay. Now let us make observation on the long candle. Here is one long candle and here is one small candle. Yeah. But the wick of this small candle is already out of the long candle. Right? So is this an engulfing candle? No. Now let us see. Is there any? Is there any? Is there any? Here it might confuse you. Here is one small wick. Okay. Here is one small wick that has already crossed the low of this candle. Okay. So that's not a countable. Now, here is this long candle. Here is this black long candle, red. And there is a blue. Is this candle completely inside this candle? Yeah. So now let us see the word engulf. Is this candle engulfed by this candle? Yes. What is the trend? Bearish trend. Yeah. So this candle was engulfed by this candle, and what it did here? What does this indicate us? The continuation of the downtrend, because this is bearish, isn't it? When we look the candles, where do we look? Where there is a change in the pattern. Do you see here? The reason we look for this engulfing, it is one of the main. Okay. So if you see here, change trend or the continuation. Okay. Is this engulfing? No. Is there? Okay. What do you see here? Oh, the screen was small. Okay. What do you see here? Do you think this is engulfing? What do you think? This is engulfing? This is engulfing. Yeah. This is engulfing. Yeah. Okay. So the reason why we doing this exercise is what we read in theory. There is a change in a trend when we see this pattern, isn't it? Did we change the trend here? No. Tomorrow, when you study YouTube or whatever you do, okay, what we need to, and whatever the strategy that we are going to study, okay, don't be 100% sure that, okay, now the direction is going to change. No, it may not change that as well. They don't always need to work in the same way that we expect. But they indicate, and among there are so many other candlesticks. You go and study there. Among them, one of the main candlestick that we study, candlestick pattern that we study, is the engulfing. Okay, bullish engulfing or the bearish engulfing. Yeah, like what we see here. If it is bearish engulfing, then the trend will change down. If it is bullish engulfing, then what will happen? Yeah, the trend will go up. That is a reversal of trend. Okay. So the purpose of the exercise is identify and don't use that only one. Okay, don't use that only one pattern to guarantee that it will change the direction. So there is another type of candlestick. Only these two are the one that we will be studying. I will be discussing here. Another is something called doji. Type doji in Google and what you see. Yeah, I hope you got it. Doji simple means, okay, the simple understanding of doji is the body is very small and it has a long tail. That is what doji is. Okay. This body, this could be here. This body could be here. This body could be here. It could be anywhere. When a doji is formed, it is considered as DOJ. It is considered as undecision. Market is not able to make decision, or the buyers or sellers are not going to make any decision. Okay, that is one meaning that we can extract from doji. Whenever we see doji, then we wait for another candlestick for the confirmation. Where is the market moving? Okay, what will be the next move of the market? So that is what doji is. Now, with doji, let's start from here. Is this a doji? This is a doji, yeah. Did market make any decision over this candle? No. Another candle was formed, yeah, and then market decided to move down. Okay. Another thing, just here, see here, this doji change the direction. Okay, this doji change the direction. The way I look doji, if you remember what I said, long wick. The body is small, the wick is long. Now, what I look with this principle is whenever there is a change in a market direction, the doji is a good indication. Do you see the long leg here? 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 Long leg. Okay. We're talking about program. Now here is a long leg. It was supposed to move down, but it didn't move. So we need to understand what created that long leg. Sometimes news, they create a long leg. Okay, we will study that in the fundamental area. So that is what doji is, and bullish and bearish engulfing is. Why that bullish and bearish engulfing is required? Because when we study the supply and demand zone, we will use those there. Okay, whenever is doji there, we will use these two candlestick pattern for us to decide the order block. Where is the order block, and where is the supply zone, where is the demand zone? Because the moment we understand supply and demand zone, then that's all, we are done. Okay, so Rupesh ji, 17. You need to study again. Okay. So here we go. We are 12:35. We will take 30-minute lunch break, which is we will raise. You will come at 1 o'clock. I will come at 1:05. All right, guys. Okay, and we will continue with the other basics of forex, and then we will move to our first strategy. Okay. Enjoy your lunch, everyone.
That's your lunch?
Yeah, just stay here. You don't need to exit. No, thank you. ल हजुर वेलकम ब्याक सबैजनालाई यहाँ सबै आउनुन्जेलसम्म यहाँ पुरेको कि छोराछोरीले भात खान ढिलो गरे क्या अब अघि अघि भनेको चिज म हजुरहरूलाई ल अघि हामीले चाहिँ के पढाएको थियौँ भनेर भन्दाखेरि मार्केट स्ट्रक्चर हैन मार्केट स्ट्रक्चर अनि त्यस पछाडि ट्रिपल स्क्रिन भनेको कम्तीमा पनि तीनवटा चाहिँ हेर्ने अब sorry, I forgot we have non-native speakers, you know. Right, okay, now with that knowledge, how do we apply that knowledge? The knowledge of triple screen and then the knowledge of identifying low risk structure, okay? So open your Euro USD. Everybody, can you hear me? Can you please type yes, just to make sure that I'm audible? Great. Okay, thank you. So now, how do we apply the knowledge of triple screen? Okay. Now here we go. Click on a Euro USD and go to monthly chart. Okay. Monthly chart, and let us start developing the idea. Okay. If you go to monthly chart, you will find M here. Okay, if it is not visible, you can click on this button and there is 1 month. Now go to monthly chart. You can use your scroll button, small. As much candles you can view, you will have a better insight. Okay. If you go to monthly chart, now the price came down, went up, again came down, went up, again came down, but it didn't touch here, went up and again came down. Okay, it broke the previous low. This was the low. This was the previous low. It broke the low, and now this will be the July's candle. Okay, I mean this month last candle. Right? Right? Yes. Sorry, I forgot to share my chart. So go to your monthly chart, monthly time frame. Click on this small button, and you can, if it is not visible there, you can, if you click on this small button, it will appear on your board. Okay. So go to monthly candle and mark. Let us mark this area. Why we are marking this area is because this was the low, and it broke the low here. Now this is July's candle. We don't know which candle will be formed in August. Okay, because the next calendar, the market will open on 1st of August. Now we marked our monthly. Let's go to weekly and let us see the formation in the week. So monthly and weekly, they are very identical. And if we see in weekly candle, in weekly time frame, there are 2 candles already on. Already on the direction. So let's go to daily candle. Okay, this is our daily candle. Now, if you see the daily candle, there is no doubt that it is downtrend. So It is following the same structure. If you see here. It is here. We don't know whether it will go down or whether it will go up. Okay. The money that we make will be determined how good we are on predicting the probability. Okay, it may go down, it may go up. If it goes up, where it goes. If it comes down, from where it will respond. We don't know. So this is the current structure. Okay, this is our current structure. Looking into 1 day time frame, let us go to 4 hour. And remember, this was the area where we marked in our monthly chart. Okay, now we are into daily chart. What do you see in daily chart? In daily chart, now mark this area. This is the high of daily chart. Okay, so it came up, hit this area, down. Came up, tapped this area, down. Came up, down, up, down, up, down. This is the highest area, and let us see where is the keep marking. Okay, keep marking, so you start visualizing. This is the high, and this is the low of our 4 hours. Let's go to 1 hour. Okay, let's go to 1 hour. Now, what do you see here? What market structure is this? Can you tell me? In this particular space at 1 hour time frame, which structure is this? Is it bearish structure? No. Is it bullish structure? No. What it is doing? It is ranging. See, it's coming up, down, up, down. We don't know when it will break the structure. Okay, so for us to decide where it will go, we need to understand where or what are the factors that will help us to decide whether it will go up or down. Now, let's go to 15-minute time frame. Okay, usually the intraday traders, they trade in 15-minute time frame. What do you see here? This was the high. Market came down, up, down, and there are no other moves which touch this one. We expect one day it will come and it will grab this area. Okay, but here is the area which has been tested multiple times. What do we mean by tested multiple times? It came here, came down, came up, okay, down, again came up and came down. Now it is moving up. What we don't know, whether it will move up, break this one, touch this area, again come down to this low point and go back, or maybe this will range here, cross this area, go back and move down. What will happen? We don't know. So we do not go that too far. Okay, wherever market goes, we follow the market. We don't trend against the market. We follow the trend. Now, wherever it goes, this is very big area. Okay, this is very huge. It may look very small, but this is very huge area. If you see here, This is the area where so many sellers are waiting. When the price comes to this area, then what people are going to do? Sell. Here we come now, something called supply area. This is the area where so many people are interested to sell, and there are bankers. So here is another terminology now we are using. There are hedge funds, there are banks, they do trading, forex trading, okay? And they don't do a trade like us. What we do, we just come here, we see the market, it pulls back, we buy here and we sell here, okay? They don't do that. What they do, their trading is done by the computer, which is algorithm. They put sell here, okay? They put sell here, some banks put sell here, some bank has put sell here, okay? So all the money makers, that is what we call them, money makers, all the money makers, market makers, they make the decision on whether to move the market down or up. So let's say bank X, they have already position here. There is bank Y, they made the position here. There is another bank. So that's the reason it keeps on coming, respecting that area, and then it comes down and again goes back. So this area is called supply area. Okay, this is the area where there are more sellers. Now there is another area where there is a demand. Okay, we need to identify which is the demand area. Now if you look into this one, the high probable demand area is this. We can call intra supply and demand. The another demand area, okay, at higher time frame is over here. What we don't know, okay, on Monday, what we don't know is whether it is going to respect this area or whether it is going to respect this area. Okay, if it respects this area, then what will happen? It will tap here, it will come down, it will take this low, and it may return, or it may come and test this area, because this is also the untested area. Okay, it may come here and then it may again take its own direction. This is what will happen on Monday. Now with supply and demand area, what we need to understand is we as a retail traders, we must always keep in mind about these guys, bankers. Okay, we must follow the footprint of bankers, hedge funds, because they have huge money. They move the market. We don't move the market. Another thing now we need to understand is liquidity. What do we mean by liquidity? What is liquidity? Liquidity is the area where there are a lot of buyers and sellers. That is the area that we need to identify. The moment we identify there is a liquidity, then what we can make sure is the market will come back to that area and it will take off the liquidity. Okay, now where we see the liquidity are available on equal highs, This is another terminology that everybody must understand. Okay, this is what we call equal high. EQH. You may forget later, just note it down. Okay, equal high. If the market makes this type of high, then we understand there is liquidity. Okay, this means there is liquidity, equal high. And if there are equal low, move up, market comes down, up. This is another area where there is liquidity. This is equal high, and this is equal low. If there are equal highs and lows, market comes back to grab that area to take that liquidity out. Okay, and another area is where there is a trend line. So in this structure, where is the trend line? This is a trend line, see? So there are three areas where the liquidity are, that is equal low, equal high, and the trend line. Now, let us have a real-time example. Where do we take it from? Okay. Let's take it from here. Okay. The market is moving up. Yeah, the market is moving up. This is the demand zone. It tapped the demand zone and it moved up. Okay, it came down. Well, what did you see here? This is 15-minute chart. Okay. This 15-minute chart. It went up. It went up and then it came down. Went down, it came down. So now here people who have started sell limit. I will show you later on. Here are the positions. There are so many positions open here. Okay. So this is the liquidity area, which we call it buy side liquidity and sell side liquidity. If it is on top, then it is the buy side liquidity. If it is down, then it is the sell side liquidity. Okay. This is not me who created this terminology. This is by Mr. Michael, who is the mentor of the mentors. Okay, that's called ICT trader. Okay, this is ICT method that I'm teaching you. Is anyone's audio on? There is a echo in the sound. Now, okay, okay. So what I'm teaching you is a mix of SMC, other mentors method, combining with the method of ICT, okay, inner circle trader from Mr. Michael. So This is the liquidity I created here, and what the market did. See, boom. It means anyone who were on this position, now they are in the market. It just came, tapped those guys, and then came back. Yeah. And now what is happening here? Here is another liquidity pool. So what market does? It came back, tapped this, and then took it position, came back. So what we need to understand is we need to identify, okay, this is a supply zone and this is a demand zone. The moment we identify supply zone and demand zone, then what we do? We wait for the market to come. We don't go after this, okay, move here, we go there. No, what we do now is, right, okay. What we have identified is this is the liquidity area that has been taken off. Okay, and we will wait for the market. What the market is going to do? Market is coming down. So here, this move was because of the news. Okay. Another thing that we as a trader, we must be always be careful on the news. So what you do is you always follow this. Put it in your computer as a bookmark. FOREX calendar. If there is high impact news, it highlights with red color. Okay. This is highlighted at that moment. So Wednesday 27, 5:30. Yeah, we are out of the market by that time. Otherwise, the money we will get swiped. Now just think what would happen here. We will get smashed. Okay, we got to be very careful here. Now see, what did we tell earlier? This is our demand area. Yeah, this is our demand area. This whole range is our demand area. Now market came. The moment it touched our area, we are already in the market. Okay, so and then what happened? We are in the market and we booked a profit over here. So what happened here again? This was the supply area. Okay, it came and then it took up. It tapped in the market and it continued. So here we are in a ranging market. Yeah, like we discussed earlier, here we are in a ranging market. It is going to range up, down, up, down, up, down. And if we identify where is the supply area and where is the demand area, then what happens? Then there is where we plan our trade. So what you have learned now, number one, identify the supply and demand zone. Okay, we identify the supply and demand zone, and what we do, here is another tool now you are going to learn. Okay, you go in this area, in this button, and you click on this 2 star. One is called long position, another is called short position. One is long position, another is short position. Okay. So what we do here, this is the supply zone. 1, 2, 3, 4, 5. Now still we believe that this will be our supply zone. Now we are selling. Which tool do you use now? This is called short position. Yeah, that means we are selling. And if you want to buy, this is the tool we use. Long means buy, short means sell. This is buy position. Okay. So now we are planning a setup. Okay. What we said is, okay, this is our supply zone. That means I will sell when the market is here. And this is this is the area where it has continuously tapped. So it may cross this low or it may not cross that low. Now we are deciding our buy, our sell profit and our stop loss. Now, what is stop loss? Stop loss is when the price goes more than what we have predicted, then the computer will automatically take us out from the market, so we don't lose more money. Okay. So what is the usual or standard stop loss? The stop loss is usually from, it depends on traders to traders. Some of them, they keep 40 stop loss. My standard stop loss size is 12. Okay, in currency I use 12 pips stop loss. Now when we put stop loss, then what happens is we get protected. Okay, so we have two different we have identified two different supply area. Okay, one is this. One is this. What we have understood is there are still sellers staying here. Okay, and the other one is this. This is another our buy side liquidity, or we can say supply area. This is one area. What we know is when I keep here, the price may come up to this level, hit this area and come here. I need to be prepared for that as well. Otherwise I will be out of market. So if my stop loss is here, then that's very small stop loss. Okay. So now I decide, okay, this is my trade setup. If the price comes here, it taps here and it goes down back here. Okay, here just to, and wait, let me teach you this first. Pips and points. In trading view, it is traded on the basis of pips. Okay, pips and points. Sorry, on the basis of points. In MT5, it is the pips. Okay, now what is pips? Like, let's say, for example, it is a measurement of currency. For example, if we are going to buy water, what we do? I need 1 liter of water or 1 liter of milk. If we are going rice, 1 kilogram of rice. Okay, likewise, how many pips is the currency? Now, if you see Euro USD, what is the current rate? 1.0225. There is another number which we don't use it. Okay, there are 5 digits. We don't use the last one. 0226. Now what we count is from the last one. Let's say, for example, you sold out here. You sold here and you close your position here, so 226, now 126. That means how many pips did you make? 100 pips. That is how it is calculated. Okay, that is a pips. And this point is 10 points makes 1 pip. That is only you need to understand. Okay, in trading view, what we do is, let's say for example, if the stop loss is 13 pips, then 13 times 10, 130. So that's the stop loss. Now, with keeping these things in mind, that the price may go up to here, I will use 35 point stop loss. Yeah, 35 pips stop loss is there. Profit is 132. So let us now, I hope everybody got the pips and points. Yeah, in Japanese yen there are 3. Like here we have 1, 2, 3, 4 digit. In yen we have 3 digit. Okay, that is what is pips. So if you have a broker connected, real-time broker connected in trading view, then what you can do, you can straight away position here. Okay, or now we are going to trade in MT5. So now what we do in MT5, we are in a selling position. Yeah, so what is our entry price? 1.02491. We go to our trading view now, our MT5 now, and here what we do, right click, new order. Okay, new order, we'll select our currency pair, and here we call pending order. Okay, so listen very carefully. This is very very confusing to you guys. Market execution means the moment you click buy or sell, immediately it will go to the market. Now here, what we are doing, we are not buying or selling now. This is our trading plan. So what we are doing here is we are waiting for this price to come, tap us in the market, hit our area, and then return back from there. Okay, so we are waiting for the market. So in that case is what we do. In that cases, what we do is we create something called pending order. Pending order. Okay. Now here, buy limit, sell limit. These are the two that we use most often, buy limit and sell limit. What we are doing here, we are selling. When we are selling, only when the price will come here. So we are limiting ourselves by not allowing market to execute here pending order. We are selling our sell limit. Okay, when that limit is fulfilled, then the computer will execute our trade. So sell limit, if we were buying, that would be a buy limit, and stop level, this is our stop level, which means if the price moves above this one, we will be out of the market. We will not be losing more money than this. That's our stop level. This is our stop level. Sorry. We are not giving you pending order, sell limit. What is the current price? The current price is 1.01168, right? What is our position when we want to sell? From here. So in sell limit, price. This is the price we want to position. And what is our stop loss? 2841. Stop loss 2841. Where do we want to make the profit? Profit here. Because we expect it may come down. It may not come down as well. Okay. Take profit. Price, stop loss, take profit. Then what we do? We place the order. I will come back to the volume later on, okay? And then we place. Now we cannot place because the market is closed. Then we wait for the market to run and let us see what happens. Going up. Did you see? What did you say? From here, this was our area, isn't it? We said buy, sell the position if the price comes, to 491. So the price came to 491. It hit our area. We are in the market and immediately it came down. It went up. Okay. So until here, it didn't come down. It already moved up. So if we close here, over here, or you want just a confirmation, because it did not break the low. So the profit that we made here is $103. Divide by 10. Yeah, 103. We made 103 pips. How much this is in money now? Here you need to understand something called lot. Okay. Yeah, we need to understand the lot size. The easiest for us to understand the lot size is, if you see here, whenever the value is 100,000, then the lot size is 1. Okay, one lot size equals to 100,000. That is called standard lot. Okay, so if you sell one lot, that means in every pip you make $10. If you lose $10, if you win $10. Now go to the website. There are so many websites there, you can use any. Thus, select the currency Euro USD PIP. It will tell you if your lot size, if your lot size is 1, that means per pip your value will be 10. Point 10, the value will be 1. 0.01, the pip value will be 10 cents. Okay, so you just need to understand these 3 different positioning sides. Or wrong position will kill us, guys. Okay, but you need to be very careful. Wrong positioning will kill us. If you have $100 and yeah, one lot means you are trading 100,000, okay, and 0.10 you are trading 10,000, and which is called micro lot 0.01. If we are with capital amount of like $100, $500 is 0.01. Okay, like $25,000. My maximum lot size is 0.5. Sometimes I trade on 0.5, sometimes I trade on 0.70. It depends on how volatile the market is. So that is the lot size. And now you are on demo account. Don't think that money is not yours and you can use any lot. No. If you are not making money in demo account, you will not be able to make money in real account. Keep that in mind. Okay. So that is, consider that as your real money. Now, over there, you can start with 0.01. Okay, start with 0.01 and see how it goes. If you keep on improving, and then start increasing this. Okay, 0.10, 0.20, 0.30, 0.40, you can start increasing that. Now, simply looking into the numbers, what you may feel is, when I'm going to be rich? Guys, this is not a quick fix game. We don't become rich waking up early in the morning. Okay, we don't become rich in 1 month. It is a gradual process of being financially stable. Okay, that is how you have to take this gradual process of becoming financially stable. Well, I have recorded this video yesterday. I have recorded this video yesterday. Let me show you. Okay, this was Euro USD. This is a buy position. And we will learn about those trend lines in a moment, okay? So it keeps on. I have done the notation as well. How long is this? Right. Let's continuously watch. It's 12 minutes. If you see those strong and speed move, that is because of the news. Right. That was yesterday position. And what I'm trying to show you here, guys, is, don't have a wrong motivation, okay? We don't always make money. Keep that in mind. Yes, it was yesterday's position. How much did I make in that yesterday position? $370. Okay. Eh? Right. Okay. This content came into while we were talking about lot size. Okay, that was like I said you earlier. My maximum lot size is 0.7, while this is $26,000 account. Okay, this is a prop account. And here this is my size 0.7. Okay, so if your position is right, okay, if you have if the prediction has high probability, then what you do, you make good money. You can see here minus 62. When did I lose this minus 62? I will show you. Okay. I lose that $62 because my prediction was this. Okay, my prediction was this. From here, this is the last area that the market will come down, and from here the market will return back. Okay, so I had my stop loss until here. I had very I kept just small stop loss here. Okay. Yeah, it was up to here. So what happened? This was my prediction, but the prediction failed. What did market do? Market came down until here. Okay, market came down until here, and I lost that $62. That is what the loss is. And again, I went into the position because what I know is it has to return back from here. Okay. For yesterday's move, if you see the yesterday's move, maybe Monday, Tuesday, it will again come back to this zone and then revert. We don't know. We will see on Monday and Tuesday. But for yesterday, if you if you look into 5-minute chart and hourly chart, this was the predictable area, high probability predictable area, and it came down. It took my stop loss, and then I had a loss of this $62. And after that, and again I went to a buy position, and with 0.7 loss, then it made good profit. That's 370. Okay, so that was about lot size. Okay, don't be in a thought, don't generate that thought. Don't generate that thought where, like, you put high lot size and you make high money. No. Sometimes it may work, but most of the time it will wipe your money. Okay, it will leave you naked. So don't do that unless you have enough money to give it to market. That is what lot size is. All right, guys. Yeah, I was showing this position, and that is what it is. Yeah, it is called volume. Okay, you need to be careful over there. And if you remember that in the position while we were positioning, we sell at 102.64. But what it did, market didn't sell here. Yeah, market took ahead. When you buy, actually you buy here, but it shows that you are buying here. not in exact area. Why is that? What happens? If you remember when we did a Bitcoin, it was not in a position. That is something called spread. Okay. That is something called spread. You must be careful. Now, what this spread is? Spread means, let's say, for example, at the moment, the price of gold is, let's say, for example, 1740. Yeah. Let's say 1740. Now, when you are trading at a peak hour, there is like 17 to 20 pips spread. This 17 to 20 is the money that the broker makes. So what happens when you buy in the price of 1740, automatically the broker system will position in 1747. Actually, you are not buying in 1740, you are buying in 1747 because this $17 dollar is for broker, and the broker will take the moment you, whether you lose or whether you gain, no problem. The broker will take its profit. Likewise, when it comes to profit booking, then also, if you said, okay, I will close my trade at 1747, then actually the trade will close at 1740 because of this spread. So you must know what is your spread. Okay, the spread, yes, there are standard, but it depends on the opening and closing of market. Market opening, when it opens, when it closes, the trading session, this depends. In peak hour, the spread might be high. In non-peak hour, the spread might be low. Okay. Let's say, for example, I will show. Yeah, look at this screen. In this is another platform that's called CTrader. Okay, this is a CTrader platform. If you see on this corner over here, if you see on this corner, here it is mentioned, spread is 5.2. This is for Euro USD, the spread is 5.2. Okay. So if you see on gold at the moment, forget about this, 115. Okay, it is off. So you must understand this. Okay, there is something called spread and something called commission. Yeah, some platform they show this information, some platform they don't show this information. So in trading view, the commission amount is shown here. Now, there was a question from Vivek sir, and I think this is the time for the answer of that question. So the question is then, how does broker make the money? Yes, this is how they make money. The spread that they charge us, you know, for every position is $17. Now imagine how millions of them they put the position. And when you close, open, please remember that you are giving spread every time you are closing and opening the positions. Okay. You are giving commission every time while opening and closing the positions. So you must be careful on that one. That is one area where they make money. Number two, I don't know whether I must say this, but let me know you. When the broker knows that you do not make profit in trading, they don't connect your trades to the liquidity provider. You know that? They take the money. So if you are a continuous loser, and that is where the broker makes the money as well. Like I said earlier, there is something called liquidity provider. What do broker do? They connect us with the liquidity provider. So whatever position you put, that what happens, then the broker connects that to the liquidity provider. The moment the broker knows this guy doesn't make money in trading, you know, they don't connect to liquidity provider. They take that money. That is another insight view, you know, insightful view of how they make money. So you make sure that your broker has a right liquidity provider, okay, and he connects. Otherwise, what will happen later? No, there was a problem in a system, you know, this not happen, that not happen, and then you don't get your profit because they have to pay profit from their pocket. That's your side information. Now let us come back. Okay, what we were studying is creating a position on the basis of supply and demand. Okay, we need to identify the supply area, we need to identify the demand area. When you keep on growing, when you continuously grow, then later on what you start studying is you start looking into the ICT, because I don't want you to confuse with so many terminology. Okay, if I start telling you about the buy side, liquidity, sell side, only the terminology is different. Mr. Michael doesn't use supply and demand. He use buy side liquidity, sell side liquidity, while the Larry King and other guys, they use supply and demand. So both of them are same. Okay, the positioning is same, all of them are same. The only difference is the terminology. So what you have learned very critical until now is three things. One, go from the higher time frame, identify the direction where it is going, and then number two, identify the direction, and then number two, identify the market structure. Okay, because at big it will look different. When you come to 1 hour chart or 15 minutes chart, it looks different. Then you identify the market structure, whether it is down, whether it is up, whether it is ranging. Okay, now after doing that, number three, now what you do is you identify the liquidity zone. Okay, you identify the supply zone, you identify the demand zone, you identify the liquidity zone, and then you decide where the market will go. Okay, from now onwards, what you are doing is okay, you will say, right, okay, this is the sell side. Okay, this is sell, this is supply area, this is demand area, this is supply, this is demand. Now it is up to you. You may say, okay, no, this market, I don't know until where it will go. Maybe it will cross this, or maybe it will cross this. So this is my demand area. Yeah, this is the demand area. This is the demand area, and in demand and what? Yeah, so the market is going to come down. Okay, and I will put my position here, and I expect this up to, it will fill up to this high here. So this is your plan. You plan this and you create a position in MT5, make it ready, and wait for the market to hit the position. Okay, so that's identifying supply area, identifying demand area. You identify supply and demand, and over there is another thing that I'm going to add on this information, is something called order block. Okay, now what is this order block? Order block, which is called also OB. Order block is the area which is the last candle of that move. Listen very carefully. Demand zone means this is a big area. You know, the demand zone can range from here to here. This is the area for the demand zone. Okay, this is a big area of demand zone. So within that area of demand zone, there is one specific area where the price will come, touch and go. See here? Can you see? The last candle of that move. Now see, this was the upper move, right? Now before this upper move, which is the last candle? This is the last candle. Yeah, this is the last candle. And market move up, came back, gave a just a small kiss, you know. Do you see here? Very small. Touch, and then went back to its own area. That is called order block. Okay, so and usually what we do, is if you don't get order block, then you go to the smaller time frame, which is, we call it refining the area. When you get confused, I don't know which one is that. Yeah. So here now we are clear that this is our order block here. Okay, the last candle before the move. So if tomorrow, or according to the move, let's say how long or how big or this it moves, this will be one of the area, and the other area is over here as well. This is our demand area. Okay, this is our demand area. Here is a demand area, and here is also order block. We can identify order block here as well. So demand and supply, it is a big zone, where order block is very specific area that we identify, and then we identify to predict the position. Okay, so this is all a trading plan on smart money concept. The moment we say smart money concept, that means we trade how the bank trades, we trade how the hedge funds trade, market maker, how they trade, we trade in a similar way, we think in a similar way. That's the reason we call it smart money concept. Okay, supply, demand, order block, these are the points that please consider. We position on the basis of this information. So now, how do we know whether it will come here and go? Yeah, how do we know that? Now, here is what you need to know, something called break of structure. Okay, something called break of structure. So okay, now look at this chart very carefully. This is gold. Okay, why so many of them? So many of them, and including myself, right? We didn't make money on gold yesterday. And then I went to the chart and realized later on, because everybody were on sell position yesterday, because this gold came down. Now when price moves, like I told earlier, it moves like this. It comes down, comes down, comes down, comes down, comes down, right? Comes down, move up, boom. Okay, now I'm going to explain you this. The moment you understand this, and the moment you understand the direction, you are going to make money. So market comes down, up, down, up, down, up, down, up, down. Gold is making down. Now, when it came here, it should come here, isn't it? Right? It should come here. So, market did not come. What did market do? This was the point. This was the point which the market should not break, isn't it? market broke this structure. Okay, that is what we call the break of structure. Market came down. This was the low. Sorry, this was the higher low, lower low. Yeah. So it was supposed to come back from here, but it did not come. What it did? Break the structure. After breaking this structure, this move will come back again. But while coming back, it should not again take this one. Okay, it will come here. So it will come here. It may make another low, come back. It may take this low and then go back. It may come to test here and then continue its move. But it usually should not come down, break this structure, because if this break this structure, then what will happen? It will come down, test, and then again revert. So that is what happened yesterday. Everybody were expecting that it will go up to here and continue the trend, but again it went here. Okay, and we were again waiting for break of this structure. Didn't break, and gold went up, and we were staying on selling position. Okay, by luck, like it came until here, and it continued. So what do you see in gold here? This is 15-minute structure. Okay. Where do you think will be your demand and supply zone? Just write in chat box the numbers. Okay, let's say for example, this is how much? 1761, 1762. Just write, this will be my demand area, this will be my supply area. Let's have a look and write down, please. When the price will go, you will be selling, and where the price will go, you will be buying. Which is the appropriate one? Now again, look into your monthly time frame, weekly time frame, daily time frame, and come to this 15-minute time frame. Okay. No. My demand area will be, for example, 1763. My supply area will be 1753. Because the supply is the area you will be selling and demand is the area you will be buying. Now, in this exercise, you are planning to buy and sell gold. Okay, your position. Right. Look into monthly chart, go to weekly chart, look into daily, daily and 4 hours, they have very similar, go to hourly chart, and then decide where to put your buy and sell position. What have you done? Yeah. Pull down this down. You don't have enough space. Guys, take this area down, this screen area down, so that you can have enough area. Okay. If there is something called, if you have that volume, take off that volume as well. And you will have big space to work out. Right. Pure life. It is not exactly support and resistance. Okay. Why it is not exactly support and resistance is because you can have support and resistance in between those supply and demand zone. This is what we need to understand. Okay. Supply and demand zone may have support and resistance. Support and resistance may come from the trend line as well. So supply and demand is the institutional way of thinking. Wherever there is high liquidity, buy side liquidity or sell side liquidity, there is the area where there is a supply, because we can't see the computer, isn't it? How many positions are there? It is only the algorithm that wipes out all of those positions. So yes, in a way, to understand, you may understand in that way, but they are two different concepts. Support and resistance is retail, while supply and demand is institutional concept. If you start thinking on an institutional way, then it helps a lot. Right, guys. Please answer. Please answer. Okay, I want 100% participation. Not participating means either you know or you absolutely don't know. If you don't know until now where is my supply and demand, that means you will not understand furthermore. Okay, so please, whatever the position you see, you have to have that supply and demand area identified. Mansurji, 1678, 1752. Okay. Shivji, supply 1767, 1753. Okay. 1752, 1767. Okay, right, great. Guys, please participate. Mention what you have identified. 72, 52. Okay, right. Let us do together then. Okay. Look at the screen. Let us do together. I don't trade gold that much. Okay, so let us explore it. I only trade one currency, that is Euro USD. Very simple. I sometimes if it goes favorable, if it has a clean structure, then only I go. Now, what you need to understand here, like if you have joined my previous Zoom webinar, what I have told you, when it comes to Euro USD and when it comes to gold, okay, compare them with something called DXY. That's called dollar index. Okay, that's dollar index. Now, always remember, when the dollar is weak, the gold and Euro USD gives us a buy opportunity. That means they go up. When the dollar is strong, okay, when the dollar is strong, then gold and Euro USD price goes down. This is the fundamental, guys. Okay, fundamental means knowing the parents of your boyfriend. Okay, knowing the economy of your boyfriend. If they are fundamentally weak, you are going to suffer in the long term. So let us see, before analyzing that, let us see what dollar index is doing. Let us go to daily time frame. Okay, now what do you see in daily time frame? Dollar is getting stronger and stronger and stronger. Okay, in long term. Now you can see why the gold price moved. Yeah, where is gold? Gold. Okay, let us see the daily structure. Everybody were expecting gold will go down, isn't it? Then from this point, gold made inverse move. Why? Because the dollar made this move. Now, gold will again go down. Okay, May, we don't know. Okay, now looking into this dollar index, what do we know about the structure of the market? It goes up, it goes down, it goes up, it goes down, it goes up, it goes down. Dollar is at this area now. And what do we know? Something called break of structure. Yeah. If this is going to break, we are here at the moment. Where is the low of this structure? This is the low of this structure. When will the dollar index go down? If this price comes here, take this low, and it will make another reverse. If the dollar makes this move, then we can have a long-term opportunity in buy side of the gold. Okay. At the moment, we don't know. At the moment, it is here. If US index will follow the proper structure, now it is time for dollar to go another up before it comes to this high. If from here, from Monday, if it continues moving up, then what will happen? Dollar will go down. Otherwise, if dollar remains weak and if dollar starts coming down, then this will go up. This is the fundamental now we know about the gold. Okay, so this is our daily structure. This is our daily structure. Now we start marking them. your first thing of analysis starts from marking. Okay, there is nothing called right marking, or there is nothing called wrong marking. You start marking, and then you start developing insight from them. Okay, so on daily chart, this is the lowest area and this is the highest area. We identify now low and high in our daily chart, and there is some area where so many return back are there. This is the area. See, now you count 1, 2, there is one small, 3, 4, 5, 6, 7, 8, 9, and we call it, this is the key level. Okay, is there any other area where there is that much of heat? It went up, return back. Okay, came down, return back from this area, came down, return back, came down, return back, came down, return back, came down, return back. See, came down, came up, and it is stopped here. Is it going to come down or up? That is the question. So we will explore it. This is in our daily chart. Now let's go to 1 hour chart and see what do we see here. One hour chart, that was day high. Okay, that was the key level that we had identified. This is the low. Okay, we are at 1 hour chart now. Okay, and we go to 15 minutes. So the area that we marked as a critical level, this has already an indication. Okay, this is already an indication that this is the area where it is going to be our supply zone. You go and you look to your left. What do you see? So this is the previous high area. We come here and we look to our left. So this was the high it made, and these are the two area. Okay, so this is the previous high. You have to be very careful, huh? This is the previous high. I think it is the high area. Let us confirm. 1 hour. Daily chart. This is the swing high. Okay, now breaking this high means it will go until here. Okay, it will go until here. If it breaks, then it will move more. If it doesn't break, then again it will come back, continue, and follow its structure that we have explained in daily chart. So this is the area that we have. We look into the left side. Okay, we look into the left side. What do we see here? We see a trend line liquidity and the recent so the area that we have marked, this is our supply area between 1773 to 1765. Okay, and which could, we are looking into 1 hour chart. We have a 15-minute chart. And formula number 1. Where do we identify the supply and demand area? How to determine is the impulse move, either up or either down. Where do we see the impulse move? Over here. This is institutional move. Our next area of demand area could be between this area. Okay. And if that area is not respected, this could be our demand area. Here we must refine to the order block that we have studied earlier. Okay. So we have now learned the supply and demand. That's one. And in supply and demand, how do we confirm that? With the impulse move. That's number 1. And where there are more liquidity. Okay, if there is more liquidity, if there is something to grab, right? And if you look just above here, this is what I'm going to teach now. This is called fair value gap. Okay. What happens here is to test whether this is a fair value gap or not. What we do, we go to smaller time frame. Let's go to 5 minutes and see. Yeah. Okay. So fair value gap means, it's very important. Huh? It's very helpful as well. The movement of candle. When the candle move, they don't leave any gap. Look this very carefully. Okay. The candles, they don't leave any gap. This is how the candle moves. Now, let us look from here. This is one candle. Is there a gap between this and this? No. Is there a gap? No. Where is the gap? Here. Do you see the gap? This 5 minute candle. Okay. Let us see here. From here to here, it created a gap. Otherwise, there is no gap. All area is filled out, filled out, filled out. And here it created a long gap. Yeah. Market went up, came down, came down. and fills the gap. This is called fair value gap. It is more effective in smaller time frame. Whenever there is a fair value gap, it comes to fulfill that gap. That is what most of the time, okay, most of the time it comes to fill that gap and then continues the market. Okay, so yeah, went up, filled the gap, it was empty here, filled the gap, came down. Okay, when it is coming down, and if there is a value gap, there are maximum chances that the market will return back to fill this gap. And then it continues this gap. Okay, it also gets filled out. So this is what is the principle of fair value gap. Now let's get back. Okay, so if the fundamental goes right, there are no changes, no great news, then this is what it is going to happen. The dollar starts moving stronger, and the euro USD and gold, they start moving down. Looking into the structure, then what happens? Where is our this is our key level, this is our supply zone. Okay, this is our supply zone. So over here, then what will be our position on gold? This will be our position on gold. The gold will come here, it will tap us, and if it respects this area, it will tap us inside, and then it will get back to its own direction. Okay, otherwise if it breaks here, that means it will go up to here, and then we have to wait for the next move structure. You know, that is how we protect ourselves, that is how we save ourselves. Okay, so here I want to give another information. Now what is going to happen is we are already on 1667. Okay, like we can see here, this is the range. We don't know, it may go up to here, test this area, and then continues, you know, its own direction or come back. So if you guys are using signal, okay, and the signal provider provides you very big range of stop loss, means you must be very careful. You may, you know, you are fridge, you will not have opportunity to put positions over there, so you must be careful with this one. Okay, now since you have already started analyzing this, you use this method and then continuously refine it, and then gain the perfection. Okay, so that is another area which you need to look is the fair value gap, right? So now we said we will sell here. Always ask a question to yourself, why? Why do you think, or why do we think that is an sell opportunity? Okay, you should have a narration. What you should have? You should have a story. If you don't have a story, you don't do it. That means you didn't see the market structure. Okay, so why? We have a story. Fundamental shows strengthening dollar. That is one. If the dollar is strong, gold goes down. Very simple. It shows the strengthening dollar and when we look into the monthly, okay, monthly chart has strong rejection. Can you see this? It didn't come down. It went, hit this zone, and then now it is reverting back. Okay. It has strong rejection and then came back to the level of previous, see here, previous low. It may is the demand zone. That's what the stock shows. And in 1 hour chart, this is another area, and what is that narration? And another reason why we see is here is a big fair value gap, which may be filled out. Okay, so you must need to have a reason on why the price is moving. Why do you think that it must go up, or why do you think that it must go down? Okay, so what we have completed until now: triple screen, market structure, breakup structure, supply and demand, order block, right? Market structure, we see where the market is going, up, down. Triple screen, we learn to check the different time zones. Breakup structure, what was breakup structure? Do you remember? Market goes up, 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 and what it does, it breaks. No more space. Market goes up, down, makes nice move. All of a sudden, it will come down, breaks the previous structure. Yeah. Test the area and down. So it has to break the structure to change the direction. Okay, if it doesn't break the structure, then most probably it will not change the direction, it will continue up. It is just a pullback. Okay, that was our okay. On the basics, we covered lot size, we covered pips, we covered what was that? Spread, and there is something called leverage. Everybody has to understand. When you open an account in XNest, it gave a leverage. Okay, what does leverage mean? Leverage means you have $100. That is your money. So the broker says, okay, guys, I'm going to give you, I'm going to give you 1:1,000. Okay, $1:1,000 leverage ratio. That means if you put $1, you are getting $1,000 of facility to use it, right? Now you got to be very careful on this one, because if you put high position, that means what broker will do? It will already capture its money, isn't it? It will always protects that. It gives you high leverage to trade while you have only $1, for example, and you assume that okay, I can trade until this money. So then you end up with losses because you have a small account to hold. Yeah, you have a small amount, you cannot hold more, and then money goes. Okay. If if you become expert in the area of trading, then there is benefit of using leverage, because now you are expert, you know what you are doing. So with small money, you can trade big money. But when you are beginner, at beginning level, then what will happen to us? We are just learning at learning stage, and that leverage doesn't become helpful to us. Okay. That was about leverage. Now, yeah, another way of confirmation. Now, how do we confirm? There is another tool I'm going to teach you now, is something called Fibonacci. Yeah, have you heard about Fibonacci? Good. It's very basic. Now, zero plus one, how much? 1. 1 plus 1, 2. 2 plus 1, 3. 3 plus 2, 5. 5 plus 3, 8. 8 plus 5, 13. 13 plus 5, 13 plus 8, 21. 21 plus 13, 34. 34 plus 21, 55 plus 34, yeah. Are we correct? Okay, 0 plus 1, 1, 1 plus 1, 2, 2 plus 3. We keep on adding those numbers. Okay. Now, for everyone, please. Now, here is a beautiful thing. Okay. What this mathematician identified, you keep on adding the number with previous number, and now multiply the previous number with the last number. Let's say, for example, here, which one is the last number? 89, yeah? Which is the previous number of 89? 55. Divide 55 by 89. 61%, yeah? Is it correct? Okay. Now divide 34 by 55. 61%. Now let's go to the first one. (21) divided by 34, 61. No matter whatever you do, if you keep on adding number and you divide, this is 61. It comes 61. Therefore, it is called golden number. Okay. In trading, this is what we use. In trading, 61% is the critical area from where the trend will change. It will move back, or it will, that is very critical area. So now this is what we are going to use. Fibonacci. Yeah. Fibonacci retracement. Okay. Let us take this high and let us take this low. Now, my Fibonacci might be different, might look different from yours because I have set up in that way. What we also need to understand from institutional perspective, okay, these are the numbers: 25, 50, okay, 80, 100. The institutions are not interested in 1.27. Okay, if you put this type of numbers, I don't know whether you have experienced or not. If you put this type of numbers, we in my experience, I get never tapped. Let's say, for example, if my sale stop is 1.27, it will return from 1.25. Okay, so these are the figures that the institution they use, right? Because there is no human being sitting on the computer and then being trading like us. There are algorithms, there are computers, robots doing trading. So therefore 61, either 61 or 62 is the Fibonacci that I have set. The default Fibonacci value is 61.7. okay, so here what we do is for us to confirm, okay, for us to confirm whether it is going to have that move. Now see the range. Okay, this is the high. Usually we take from the body. Okay, we don't take from the wicks. Now if you see here, market went up, 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 up. Where did it return back from? 62. Yeah, and then it was moving up. Okay, this is the range we keep here. It went up, up, up. It came back. Where did it return from? Yeah, isn't that beautiful? Okay, so market went up, 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 up. Expected return this range, isn't it? Yeah. So this is the power of Fibonacci. Now this is called leading indicators. Why do we use this? It helps us to predict. This might be the next move. Okay. Now let us make this move reverse and take this swing. Take this long and the recent high here. Yeah. So our prediction of supply zone is aligning with 62% of retracement where it is sitting. Yeah. This is how the Fibonacci tool helps us to confirm our position. Now Fibonacci said these are the three ranges between 62 to 70, and from 70 to above, from 79 to above is the discounted area. This is a premium area. Okay, so if it return backs from here, it return backs. It starts selling. If it doesn't, then it will hit up. It will hit our stop loss. It will go up, and we will wait for another structure to be decided. Okay, This is what the Fibonacci tool is, and this is how strong this tool is. Okay, use use and get the benefit of this tool. Right. Okay. I think all of you are also like feeling sleepy. I don't know. I'm not feeling sleepy because I'm talking, you know. Let's take a quick break, just 5 minutes. This up, throat chai, and then we'll again continue. Okay, guys. No problem, Vivek. I will repeat that part again. Okay. Right, guys, welcome back. Everybody on? Say yes, and then we move. Excellent. Excellent. We have only 5 guys now. Okay. That's good, good. Right. Vivekji was asking if from where to take the Fibonacci. That's a good question, and I have learned this on course of time as well. You know, at initial stage I was also confused. So we are into 1 hour time frame. Okay, it works in any time frame, right? Now we first look into the swing low and swing high. So this is the low and this is the high. Okay, first why we are taking this is to test whether Fibonacci actually worked. So we take here and we take from the candle, okay, not from the wick. Oops, sorry. Oh. So we are testing now, and let's see if it respects. Okay. Yes, it respected here. And if we see, and we come to this swing, it respected here as well. And then we came here, it respected. Now we don't know what it's going to do here. Okay. So what we are going to do is we will take this, because which one is the high from here? Okay, one is this and one is this. Let us take from here and up to the swing low. Up to the swing low. Then what it shows here is we are into this supply zone, and our Fibonacci is also into this supply zone. Okay. So if you want to decide so that is the last area which we had already discussed. This is the area. If it hits here, then we have to wait for next market structure. Okay. So 50 under 50%, 0. Okay. This is profit target, another profit target, another profit target, another profit target. Okay. Now this high won't be appropriate, because for us this high won't be appropriate for us whether this will continue down. This high is appropriate for us, and here is one option called reverse that will tell us whether it will from where it will go up. Okay. This high may help us to know from where it may return back. So this is the area where it may return back. Okay. If you take here, this is the area where it may return back. Do you see? So we're the low we are taking here. This is the Fibonacci tool we take here, and this is the area from where it may return back. And if we take from here, this is the area which may return back, and this is our supply zone that demand zone that we have marked earlier. isn't it? And if you take from here, this is the demand zone that we are marking here. Yeah. So supply and demand, we confirm with the help of Fibonacci curve. If it is between these three range, 62, 70, and 79. Okay. If 62 is not respected and 70 is not respected, most probably the 79 doesn't get respected. Okay. The market has to respect 62, between 62 to 70. Okay. There are very rare cases where 79 is respected. It is 50-50 chances. That is what is the power of Fibonacci. Yeah, great. Any questions, gentlemen, until now before I move to the next topic? Yes, Vivekji. FIB is valid for NIPSE as well. Can we use trading view? No, trading view, we cannot see NIPSE in trading view or XNES. Okay. Why? Because NIPSE is not traded in international market. It is only traded in Nepalese market. Like if you go here, from here, see, Indian rupees and US dollar. You can trade USD and INR. Okay, you can buy this currency here, but our currency is not in international market. We cannot. Okay, and because we have only one security exchange, that is NIPSE, so it is not integrated into trading view as well. All right, great. Looks everything perfect. Equal highs, equal low. Okay, and then break of structure. So another thing like is to draw a trend line, which is very, 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 very powerful. What are trend line? What do we do is we don't draw lines because we know. Okay, keep that in mind. Why do we draw lines? We draw lines to make sense, whether it works, whether it doesn't work. So while we draw a trend line, what we do is the trend line must touch the maximum point. Okay, now let us draw a trend line here. From here, 1, 2, 3, 4. It touched the 4 line. Let us see where it goes. Okay. Now, if you see, market went up, came down here, market went up, came down here, market went up, came down here, market went up, came down here. Okay. That means market is respecting this trend line. If this market goes up and comes down, if this market goes up and comes down, it is going to return back from this line. That is what is the meaning of trend line. When it comes down, then again, it will return back from this trend line. This is what is expected in the trend line. Okay, that's the meaning of having a trend line. Like I said again, none of the tool, okay, none of the tool are 100%. Always remember that. Therefore, what we say is there is high probability. Okay, there is something called high probability. So it goes, comes, and if you look another trend line on top here, what do we see? Right? 1, 2, 3, 4. Yeah, it was 4. And this, what did this do? It went up. Okay, usually when the market it breaks the trend line, then it makes impulse. Okay, it makes impulse move. Yesterday my position was this was my position yesterday, where I had to hit my stop loss. Okay, here was one. Yeah, this was a trend line. I was considering a trend line. Okay, and I was expecting that the market would move from here, so my position was from here. Okay, my position was here. I I I consider this. My stop loss are very small, because that's my money. If I lose much. So I don't want to lose much, and definitely you as well. So this was my position. Then what happened? It didn't respect this line. Okay, and then later on I realized, right? Later on I realized that there is a liquidity here. Yeah, can you see? There is a liquidity here. Market came, take off this liquidity. Yeah, take out this liquidity and grab this liquidity, and then market came back. Okay, so yes, we make mistakes, right? While trading, we make mistakes. Sometimes we don't see things which we were supposed to see. That's why we lose money. Otherwise, if we follow the rules, yeah, if we follow the rules and if we give enough time, not doing analysis in rush while your mood is not good, okay, you are disturbed, we should not be trading, we should not be doing analysis, because our analysis will not be correct. Otherwise, if I would have not missed this liquidity area, then I would not have put my position over here. I would use my position over here and make profit on this move, isn't it? So I lose my trade here. Therefore, what I did, I wait until the next formation of the structure. So this was my position. So I waited the market until it comes here, and then boom, that was a nice profit. Okay, so the money that I lose here, I recovered it. Okay, so so that is about trend line. When you go to smaller time frame, okay, smaller time frame, they are really effective. Okay, they are very effective. And in trading view, there is another tool, something called channel. Okay, parallel channel. Where is it? This is a problem, when you put the shortcuts, then you forget what is in the menu. Where are you? Okay, you look for it. Okay, there is something called parallel channel. It's here somewhere. Okay, parallel channel. It's over here. Okay, parallel channel. It helps you, to look for your channel, which is again the trend line. Yeah, like I said earlier. The market is moving uptrend. Okay, here it is respecting the channel. Here it is respecting the channel. It's coming up, hitting this down, hitting this down, hitting this down. And what it did, can you see? It came down impulsive. And what people started thinking? People started thinking, okay, we broke this. We are here now. What does this breaking mean? This is a breaking of low, isn't it? But what we forgot is we are in 1 minute. This is the last time frame that is available. In a smaller time frame, this breakup structure might be very confusing. Therefore, when it comes to a breakup structure, having into a higher time frame, 5, 15, gives more accuracy. Everybody thought, okay, this is going down. Now market has changed the direction. And then what people did, broke the structure. People started selling from here. It came here. and then boom. Okay, so this is how the channel helps. Wherever it makes this type of channel, if the market is moving uptrend, then what it does, it comes down from the channel. Okay, and then it continues its direction. So this is the automated form of trend line, right? Now I can see here another channel formation. Yeah. So what do we see here? Up, down, up, down. What did we learn? When it comes down, when it crosses the channel, it usually go up, isn't it? It goes to the opposite direction. That is what happened there. Yeah. No. What we should not forget is this is downtrend. Correct? Look here. Where are we? This is downtrend. Over here, it is uptrend. Yeah, it is uptrend. So it came down and went up. And here, it is downtrend. So what market did? Came down, gave us a little nice candle. So we thought, this is a buy opportunity. Then many people started buying here, and then market came down. Yeah. So this is very beautiful, you know, when you start looking into these things, and we learn from these mistakes. We do these mistakes. Okay. We learn from these mistakes, and we don't repeat those mistakes again. Okay. If we repeat those mistakes again and again, then that's something called stupid. So that's about the trend line. Now we are moving to the most beautiful part, guys. Okay. And by combining these two strategies, you will be a very good trader. Very good. Okay. The another Vivek sir, that was parallel channel. Yeah. Now, what we are going to look is another strategy, which is also a part of smart money, smart money concept. Okay, this is also a component of smart money, and this is very crucial. We trade in there are three different trading sessions every day. Okay, from Monday to Friday. This is very powerful website, guys. Please remember this one, FOREX Factory. And we have three trading sessions in a day. The Sydney and the Tokyo. That is called Asian session. Okay, it starts in the morning while we are in the bed in UA. This is the Asian session, and opens the London session. London session opens at 11 a.m. In the morning. Okay, London session opens 11 a.m. and then the New York session opens at 4 p.m. UAE time. These are very critical. If we don't understand this, we may not be that profitable as we expect. So what is the value of this one? And this is what we call Asian liquidity swipe. Now everybody understands liquidity, yeah? That's the reason I was saying supply and demand is not equal to support and resistance. Yeah. So what is support and resistance? Now this is the supply zone, this is the demand zone. Where do we have a potential resistance? Yeah. While the market is moving, this is the resistance. This is the strong resistance area. See here? Yeah. Now, because of this resistance, what's happening? The price action is not, we are not having clarity over here. So, in this strategy, Asian liquidity swipe, ALS. This is a beautiful strategy where it says all the high and low. Let me explain you. This is Asia. Okay. Asia, Sydney and Tokyo. Okay, let's say this is yesterday. Okay. This made low and high. This is Asian time. What is liquidity swipe is after this, after the Asian session is closed, which is overlapped by London and the New York, what happens is this high created by Asian will also be taken, and this low created by Asian will also be taken, and the market will move. Yeah. Let me explain again. The Asia session until 11 o'clock, it will create low and high, low and high, low and high. So this will be Asia low and high. Okay. Now the theory is this high will also be taken, and this low will also be taken by rest of the London and New York market. That's the reason. Okay, that's the reason, gentlemen and ladies, we don't trade in Asian session. Very important. No trading during Asian session. Okay, in Asia session, what we do, we wait for the low and high, and then what we do, and then we apply our supply and demand area. Okay, we apply our supply and demand strategy. We apply the break of structure strategy, and we decide whether it is going to first break high or whether it is going to break low. If it breaks high, then we sell from this position. If it breaks low, then we buy from this position. Okay, so patience is a virtue, and this is the most beautiful strategy that ever has been taught free like this. Okay, so we look this, and then we apply the first strategy we talked about: the order block, the supply area, the demand area, structure break, liquidity, yeah, fair value gap. We apply those learnings into this area. Okay, now for this, what you do, I already have it in trading view. Go to indicators. Go to indicators and type FX market session. Go to FX market session, that is by Boitoki. Click and it comes on your screen. FX space market. No. Don't click on the FX space market session. Click on the name FX market session. Okay. Don't click on the person name, click on the FX market session, text itself. Ah. Indicator. This is already I said, na? Close button, na? Once you click only once, huh? Once you click, then you close this dialog box. Okay. Yeah. What I have done is I haven't checked the history. So input, don't change anything. Okay, leave it default. But make sure the timing is on US time. Okay, your chart time is on US time. Otherwise, it won't match. Yeah. Now, let us go back. Back. Where do we go? Let's go to May 1st. Okay, because we have been watching this. Now let us see whether this theory works. And now another thing, now what we are learning here is something called backtesting. What we are learning now is backtesting. What does that mean? There are certain theories that you have to test before you apply. Okay. It doesn't mean that you have to test everything. Like, for example, if your mom says, don't put your finger in that fire, you don't taste it, isn't it? That's a fact. But when people come and say, like, okay, you make money from here, then you first test it, whether that works or not. If it doesn't work, don't do it. So you have to test somewhere. That is called backtesting. And that backtesting function is available only in TradingView. That is the beauty of TradingView. That's the reason why everybody uses TradingView, because we have opportunity to test whether it works. For backtesting, what we do is there is something called replay button. We click on this button and we get this icon over here. Click anywhere you want. Okay. So now what it does is it takes us back to the timeline that we have selected. Now we are back to 28th of April 2022. All right, before I move, let me confirm, guys, did you get that indicator on your screen? Is your screen similar to my screen? Can you please say yes and confirm? Everyone there, can you please respond in the chat box if your screen looks like my screen, having these indicators on 15-minute timeline? Or did you get the indicator? Well, let me repeat. Okay, let me repeat. Go to indicator and type here FX market. Then you will see FX market session over here. Okay, don't click on this area, click on this name. Click on this name, it is added, done, and close this. This is how it looks like. Okay, and be on 15-minute chart. Okay, be on 15-minute chart. So we backtest by ourselves. Be on 15-minute chart and look on my screen. Now, can you tell me, do you have the indicator on your screen or on TradingView, guys? Can you respond by typing yes? Vivekji, it should not be a problem. Did you log into TradingView? Because in trial version we are allowed up to 3 indicators. Can you close that indicator again and again do it? Excellent. Now let us move forward. So we are back on 28th of April 2022, 15-minute chart. Okay. So we are playing the chart now. So we are at Tokyo session. Okay, that is Asian session. If you remember, first will be the Asian session. Now see. There is a overlap of London and Asian and London and New York. Okay. What happened? Now see. What did we discuss earlier? Asian session high and low will be taken out. Yeah, that is what we understood. That's why we wait for market to make high and low. So what is this? Asia high. Asian session made Asian high. I don't want to write A yet, otherwise you may read like an asshole. So that's high, and here is the low. Asia low. Good. So the London market open. Let us see what it does. Did you see that? What did London? What did London could not do anything. London was inside this Asian session, isn't it? Then open the New York. What New York did? Took the low. Yeah. Now what is pending? This should come all the way here and take this off. Is that correct? Yes. So what we know now is the down is taken. That means it will go up, which means we have an buy opportunity, isn't it? So if we buy somewhere here, we are sure that it is going up. Option number 1. Now option number 2. Let us look into the market structure. What does it say? If we go in a higher time frame, let's go and have a look at daily chart. I think we missed it. Yeah. Are we there? Where are we? Let's do it again. Which time frame we were? I messed up. Okay, let's do it again. We went to 1st of May. You can click here and then go to 1st of May. Came here, yeah, we marked. Good. So Asia low, Asia high, and the market continues. Boom. What did London do? London took the high of Tokyo. Boom. What happened now? The Asia high is also taken during the London session, and during the New York session, the Asia low is also taken. Yeah. So from here, what did we have from here? We had a sell opportunity. Yeah. Why? Because we know it is coming down. And again, please remember, no rules are 100% sure rules. What we say, it has high probability of coming down and taking low. But there are cases where I have seen it doesn't come down and it doesn't take. It will go back here. Okay. The majority of the time, in high percentage, it has high probability that it will come down and take this off. But there are cases where it hasn't taken off. Okay. So you need to keep that in mind. Therefore, you must always look for the safe side. What is that safe side? You know your trend. If this market is uptrending, if this market is uptrend, and we are on 1st of May, it created high and low. What opportunity will you see? The market is uptrending and we are coming to London session. What opportunity do you think is more profitable and has a high probability? Buy position or sell position? Can you write on the chat box, please? Which position will have high probability? Buy position or sell position? While we are on uptrend, market is going up, 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 and what we know is the Asian session will be taken off. Okay, it is going to take off either up or down. Which is the profitable position for us? To buy or to sell? Bingo! Excellent, guys. Yes, we look for buy position. And what Tausif has said is also correct. Okay, you can look for both buy and position. Remember what I have said is look for one direction for high level of profitability. When we know this is uptrend, okay, this is, I'm just giving an example. Okay, if this is uptrend, and if you look for a buy opportunity, okay, if you look for buy, let's say for example, the market is moving on its way. The market is moving on its way. And you entered buy over here. You entered buy over here. But then what happened? The moment you entered in the market, the price came down. But you are confident that this is going up, so you will not close your trade. Let it come down, no problem, because it is anyway going up. This is the beauty of going for a direction, okay? And therefore, what we call trade the trend. You always trade the trend. If you yes, you can make a good profit in selling as well, because if you sell at this point, that means you can book a profit up to this point, which is very small, very risky. And if you are not observing the market, then you will be a loser. You will be losing your money. Why? Because you are swimming against the trend of the flow. If the river is flowing upside, will you be swimming downside? No, you will be killing yourself. And you may swim for a couple of minutes, but you may not last. But if you swim with the flow of that stream, then you just need to stay in the river, isn't it? It will take you to the direction that you are going. So that's why what we call trend is a friend, gentlemen. Okay, if you go against the trend, it will break your neck, because it is $1 million, $1 billion, $1 trillion. There is $13 trillion in the market every day, in forex market. $13 trillion. You just need to make 0.000001. That's all. To live a decent life. Okay, so trend always, that's the reason I started from the market structure. If you don't understand the market structure, then you will fail. Okay, now let us continue and see what it does. And the market started ranging, and the day is finished, right? So do you need whole day to do a trade? No. You will hear from guys, no, I am on duty, you know, I'm on duty, I cannot watch my mobile, trading is not for me. No, it's not like that. What you do until 11 or until Tokyo session, what you do? You watch until 11 o'clock, yeah? And then, because you already know which is the direction, so you, the moment this is done, then khalas. No, you know the direction, whether it is uptrend or downtrend. If it is going downtrend, you put a position on sell side. If it is going uptrend, you put a position on buy side. The story finished, isn't it? So then Asian finished, wait 11 o'clock, it may break 11 o'clock, it may break 2 o'clock. Wait until it breaks. So do you need to watch your mobile? No, you don't. Here is the line, Asian high, click here, put the alarm. Put the alarm, Asian low, put the alarm. When this hits down or when it hits up, it will give you an alarm. When there is an alarm, take 5 minutes and then put your position. Yeah, you put your position. If it is going up, if it is uptrend, put your position on buy side. If it is going downtrend, put your position on sell side. Right? And so which one is the profit target then? Usually the profit target is the nearest high or the nearest low. Okay. And let us play. See, the day is finished. You just need to have one good position one day. If it is downtrend, you put your position here. What position do you put here? Short sell. Okay. manager this thing, because what we know, it is coming here. It has to come here. High probability, isn't it? So our profit target is up to here. Maybe it will be until evening. It will come here. Or if it doesn't come and if it goes up, then it will take out this small money over here. That's what the risk is, isn't it? If there is no risk, no gain, Habibi. We always say probability. Why do you sleep? Because you think I probably wake up tomorrow morning. It is not guaranteed, isn't it? There are so many people who doesn't wake up tomorrow morning, but there is a high probability of waking up tomorrow. But there is also equal risk that we may not wake up tomorrow. Maybe the snake will bite. Maybe something will go wrong. We don't know, isn't it? So risks are always there. Now, if you think of more risk, you won't be able to trade. Stop trading. Do something else. Okay? This is not your business. You can do it. Otherwise, yes, there will be risk, but there will be again, therefore, what we call risk to reward ratio. Do you see a 4.6? That means if you put $1 risk, you will be losing $1 and you will be making $1. Okay, $1. 1 to 2. Now, how many pips we will make here? To check the pips, you just need to press shift button and just leave it, and it will calculate here. That is how many pips? 72 pips. Yeah. So in Euro USD, 72 pip means how much? Do you remember the calculation? If you use one standard lot size, then 72 into 10 equal to $720 with this move, with this one move. Okay. So do you need to trade every minute? No, you need to have a good setup, high probability setup, and then you just let the market do its job. No problem. We don't have money. We have very small money, 0.01. Yeah, calculate 0.10. So 7. It was 72. Yeah, 72 times 0.10. Yeah, you made $7 by risking how much? 1 cent. You risk 1 cent, you made $7 if you calculate into the value. That is how powerful this ACALS is. Okay. Now with this is one. Now let us continue. Let us see how it works. Let's play. Wait. Now, this is Asian session. Let us mark. Okay. Let us mark. Let us put the alarm. Set the alarm. And the London session will start. Boom. See? Wait. So, London, what did London did? It took the liquidity and moved up. Yeah. So now what's going to happen? This is still pending, isn't it? Here, do we know that this is going to come straight here, or it may go here and then come back here? Do we know? We don't know. So until now, what we know is it has broken the structure, right? Now we apply the theory of break of structure, the theory that we learned earlier, because we have no idea what this market is going to do. So what do we know? From here, it came here, it made another structure, it made another structure, okay? and now it broke the previous low. It has taken off this previous low, but it is very weak. Okay, why weak? Because the low should be taken with the body, not with the wick, right? Let us see what it makes the next move. Boom, it broke the low, it flipped, it came out. Now we don't know from which area it will return back, because what we know is if it takes this, it broke here, take this low, and then it will go up, and then boom, it will continue it down direction. What we also know, it should not take this high. Yeah, if it takes this high, that means it will move up. If it respected this area, then it will come down. Now, to confirm that, let us go into 5-minute chart, because in 15 minutes we can see only one candle, isn't it? It's difficult for us to make the decision. Let's go to 5, 3, okay. Let us come to 2 minutes. Oops, data not available because this is not a live data. What happened? This is a problem. This is a problem with. See, now it's again back to the normal ad. Habibi. And we were here. Yeah. 5-minute shot. We will try. Is this the one? Okay. Broke the high. And let us move forward. So in 5-minute chart, we can see here, it broke the low. Yeah. And what we expect the price to fall from this area. Okay. Beautifully executed. Yeah. It came here, it touched our price, and then moving around. It may come to retest as well. Yeah. Why? Because still it hasn't taken the another low. Can you see here? Yes, it took this low, but still it hasn't taken this low. Okay. Boom. Do you see here? Came, made some ranges, because this low is already broken. What did we read in the structure? And the break of structure. Yeah, comes down, and the high created over here somewhere, yeah, should not be taken out. It didn't take. And what is here? Here is liquidity. It started creating liquidity because every people started selling from here. There are so many sellers. So that's why what it said is the market, forex market, share market, are the best market. They give equal opportunity to buyer and seller. Moving up means what? There are sellers there. The market has to bring those sellers in the market, isn't it? So it goes, it tap here and brings in the market. It comes down, there are again buyers there, isn't it? So it will tap those buyers and put it in the market. Now it's up to you to play. My job is to bring you to the forex market. You are inside the market, now you play. You have to be in the market, isn't it? So the most honest market is the forex market and stock market. They give opportunities to buyer and seller. You don't know how to play, you don't know how to sell, you don't know how to buy, it's your game. Okay, so beautifully executed. Yeah, and then started the Asian. It again came back to take the Asian high. Okay, it still didn't take the low. Asia session finished. Okay, so what did we see here? In previous, what did we see? In previous day, it took the high, it took the low. Today, it took the high, it was very close. If you see, this was the last point, yeah. But it could not take the low. Okay. Now, did the strategy work? Yes. Does it always work? No. When it doesn't always work, then what do you need? You need your knowledge to apply, isn't it? So we entered in the market here, right? We entered in the market here. This was our stop loss, isn't it? And our profit target was this, because the assumption is it will come and it will take up this one. Okay, so the market came here, and what do we call this? Is something called IC, institutional candle. Okay, some call like bearish, big B, you know, bearish candle, bullish candle, but actually this is institutional candle, because your $500, my $500, it cannot create this move. It's a $1 trillion investors, hedge fund, money makers that can make this move. We cannot make this move. Yeah, what we can see is very impulsive down move. Okay, and impulse down. Yeah, and then what happened? Here is a rejection, here is a rejection. Do you remember what I was saying earlier? What did we read earlier? There is always this weak when there is a change in direction. Can you see this? Weak when there is a change in direction. So here also we have a weak move up, and we have already sensed that this is not going to hit today. No problem. Yeah, or sometime what we may see is it will just like pull back and come back. You can wait for a couple of candles. If it confirms that it is coming back, wait. Otherwise, you have multiple options. What choices do you have? If you want to wait and see, you think that it is not yet confirmed, then you can take 50% of your profit. Okay, you can take 50% of your profit and stay in a market with 50%. Okay, or that's one. Or if you don't want to take a profit, then what you do is you reduce your stop loss. I don't want market to go more than this. Yeah, so all of this profit you have made, it is already booked, isn't it? If market continues from here, it continues. Finish, it will hit my profit target. Otherwise, if market return backs, then if market return backs more than this area, then what happens? I'm out of the market. No greed. More we become greedy, more we lose money. So we must have take profit, we must have a stop loss. Okay, and in between, you just monitor it. Okay, so and it is going to next day. Let us see what it does in next day. Okay, as a full-time salary man, how much time, how much money and time we might use to earn at least $20 a day? It was a simple calculation. That was a beautiful question. A simple calculation over here. Okay. See, what I advise first, you deposit only $100. Okay, you deposit $100 and start practicing on that. If you double that money with a nice trade setup, with a planner, not using signal, not using news, yeah, because that is lock by chance. Not using signal, not using news, by your own analysis. Okay, taking advice from friends, looking other resources, books on that analysis, by working on from your own strategy. If you make double that $100, then now you are a doctor. You have right to operate. Okay. Otherwise, consider you are doing your MBBS, and that $100 is your fee. So, how long it takes? It depends on your knowledge, skill, the time you spend. So the moment you flip that $100 to $200 using your own strategy, then you just need $500 to make, I won't say $1.20, I would say pips, okay? Because how much money you make is determined by the lot size, isn't it? If you use higher lot size, you use more. So if you have $500 and let's say, for example, if you use, use small size, 0.10, right? 0.10, then you just put a position, you make more than that. Okay, because with high and low, the minimum pip is like 60-70 pips. Yeah. Yes, I have a plan to earn 500 demo before going to real account. Yes, Vivek sir, but what you please always remember, with your own strategy. Okay, please be active in Discord. Okay, everybody. I have sent you the link of Discord. Be active in Discord. Share every day. Do a trade plan. Share in Discord, and then we will discuss. We will discuss there. We will discuss there. Okay, the chart, and keep maturing your strategy. Okay, keep maturing your strategy. Don't stay long for a demo account, otherwise you will never learn swimming. You will never start swimming. Doing things in demo is like learning a theory about swimming. Okay, you will never be able to learn swimming by doing on demo. But yes, to come to one conclusion, it will help. Okay, that's very good. Please remember your own strategy. Okay, your own strategy. I'm going to share the link again. Develop your own strategy, develop your own idea. And what I would suggest is the world's best strategy nowadays, everyone using, is the smart money concept. Okay, smart money concept, supply and demand. Okay, this is the link for Discord if you haven't joined. World's best concept is that supply and demand. Okay, and liquidity. If you master this, you don't need anything. That's just two strategies. Combine them, okay, and know the fundamental, okay, the dollar fundamental. And when you pair the currency, make sure you master in one or two pair. Like if you ask me, you can see on my chart as well. That's all I have. That's all I have. Bitcoin and Ethereum, I have this because I just want to remain update on their price. Okay, how much it is moving up and down and all of those things, because it will have it also has a relationship with dollar. And I have USD index, dollar index, and I have euro index. Okay, what I trade is only euro and USD, and if the setup is perfect, I trade gold sometimes. Okay, develop your own strategy. Whatever we have learned today, put it into practice. Develop a plan, strategy, and set up and share in a Discord group. You do a setup here, you go to MT5 and apply there. Okay. The moment you say, okay, now I have to start swimming, then you start with $100, not more than $100. Start with $100 and use your own strategy. Use small size, okay, 0.01, 0.02. When you master, then only you start layering. At the initial stage, no layering, guys. Okay. That's one. And I have already covered about risk management. Always use stop loss, no greedy. Okay. If your stop loss hunt, no problem. There will be next opportunity that the market will provide us. Always use that. And remember, there are the most loneliest profession in the planet is the trading, because the senior traders, they don't want to teach you. I have seen most of them. People don't teach. Okay. Senior traders, they don't teach because they think you will take my strategy and then you will make money. Right? The junior or the person who doesn't know about trading, they think we are a gambler. Okay. If you have a wife, she thinks the only thing you know is losing money. She doesn't know how it works. So being together, sharing knowledge, sharing idea in a group, it helps us as a lonely trader. Okay. Double that money and then we'll make a move. Once this team is ready, then we will create one traders club in UAE. Okay. And then we can make a lot of changes to the lives of people. Share the knowledge, share them. If you share them, somebody will gain benefit from them. There is a gentleman called Michael. He is the ICT trader. He developed that ICT, circle trading, and he is the one who developed this smart money concept. He doesn't take a penny from anyone. Okay, he provides all the teaching in YouTube free of cost. There was someone who taught us free of cost, therefore we are learning today. So whatever knowledge you have, share with the team. Okay, share with the group. That is how we develop. That is how we grow. And for Forex fundamentals, we had a last week's session was completely on fundamental. Keep watching on market, Forex market. Know about interest rate. Okay. Know about the GDP, the currency that you are trading. Like if I'm trading Euro USD, I must know the GDP of Euro. I must know the GDP of USD. I must know the interest rate of Euro and USD. I must know the parity, the impact of parity. Yeah, I must know what will be the producer index. What will be the consumer index. These are the fundamental. If we know this fundamental, we definitely become a profitable trader. Okay, so we are very close to 5, and I think I have completed almost all of the content that I have promised to deliver you. Discord is a similar platform. It is also a communication platform, but it has more advanced functions. There are board, chat board. It is like it's a WhatsApp, advanced WhatsApp. In WhatsApp, you share your ideas, trades, plans. It is similar to that. Okay, just download the Discord and join the group. And please start sharing your trading plans from tomorrow onwards. Okay, start doing it, otherwise you will never do it. Okay, that's one. I'm always available in Discord, guys. Okay, any questions, anything? Discord. I have almost stopped using WhatsApp. I use WhatsApp only to check office messages, and our Forex team. I don't use Facebook Messenger, no Messenger at all. I'm available on Discord. So I'm almost done for today. Any questions that you have? How did you feel? Do you think it is helpful or it was helpful? And once again, I would like to thank you for all of the time. Okay, any questions? Any? So did you do the setup? Huh? So yeah, we are almost done, and I just do these things, because there were no one to guide me. There was no one to teach me how to do things. So I made a lot of losses during my initial period, but I consider those losses as my university fee. I paid to the college and I learned. Okay, so now I don't make losses. Okay, I don't make huge profit, but I don't make losses. I recover even if there is a loss, then I recover. Mostly I use prop accounts. It was just last week that I had a profit share from Blue FX. I will share the certificate to you guys as well in Facebook. So once you become profitable, you even don't need money to trade. You just need $500 and you trade $100. Sorry, you just need $500 and you can trade $100,000 account. Yeah, maintain the consistency. If you make good profit, you take 80%. Let's say, for example, in a month, if you make $1,000, they give you $800 and they keep $200. You even don't need, $10,000, $15,000, $20,000. It is as simple and as easy as that. Okay, don't make trading complex. So this is a good opportunity. Why did we come to UAE? For money. Okay, why did we go to school? Secondary, money. Why do we become a doctor? Money. Engineer, money. Yeah. Why do we do a business? Money. So this is also a business. Yeah. If you want money or you want a job, after 2 years, we will lose a job. What will you do now? You will again look for a job, or you sit on a laptop and then do a trading. You become a full-time trader. Okay. So which area do you want to develop this skill? Yeah. If you develop this skill, one day we will have a retired life. So this skill is going to be helpful. Yeah. You are staying with your family, retired life, just buy, just sell. You don't need to wait for your kids' money to come to you. Beta, can you send some money? I'm feeling sick. I don't have a sweater. Something. No, you make your money by yourself. So this is a long-term, lifelong skill. Just develop it and be financially independent. If you don't want to do it, that's up to you. I think I shared whatever I know. Any new things that come up, definitely I will share you guys. Thank you very much for supporting. Thank you very much for participating in the training. Have a good day. Let's start talking in Discord, okay? Talking in Discord. If you didn't understand the market structure, draw on the paper the market structure and share whether I'm right, whether I'm wrong. Go to the chart and go to the chart and see whether that market structure working. What happened when it came down? What happened when it broke? Okay. Go to the session Asia session, see whether this break, whether this did not break. Okay, how many times it break low and high, how many times it broke only high, how many times it broke only low. Do the analysis, it will drive you towards the profit. Okay, thank you very much, ladies and gentlemen. I truly appreciate your time. Now time to say goodbye. Any questions, please drop in the Discord. Okay, have a good day. Thank you. Bye bye.